All right, we'll start with the stock scan first. There's quite a bit actually on the list for the stock, so we'll go ahead. So typically, just kind of give you guys intro if you're new. I have a special set of clouds that you guys are seeing here, which is basically looks up the monthly ranges, the weekly, the dailies, in 4 hours, and I'm able to kind of figure out based on whether I know the company or not. But I look at the technicals and see if the stock, excuse me, is at a level at the bottom of the monthlies. That means on bottom of monthly Keltner channels. If it's at the bottom, typically, and I'll let others speak to it. Anytime we bought stocks that are pretty good stocks at the bottom of monthlies or weeklies, we've gotten a nice little return. And I'll give you guys like few that we've gotten. So for instance, he's a Zscaler. If you guys recall, we got at 85. It's still trending up. It's about almost $200, right? We bought an AMD off of the bottom before as well. So here's your weekly bottom perfectly, and now it's kind of touching monthly top, and most likely it's going to auction lower from here. So the clouds actually provide a great confluence with the volume profile. There is logic in them in the code itself that it finds it, right, based on the volume. So with that being said, any questions just to kind of set everyone together? Any questions from anyone? What we are going to look for? And if you don't have a long-term portfolio, at least you can start thinking about it, right? I do have a long-term portfolio that I use my money for long-term. It's not trading; it's investments that I keep for longer periods of time, right? So I typically start with searching on the monthly bottoms because I want to find the monthly bottom range, and then what I do is I'll document it in this Google tracker, right? What is the price? Where do we want it? And kind of the exit price, and then if kind of what's the cloud level. Before I make the purchase, I also independently go back offline, volume profile setups, like on the higher time frames. I look at composite profiles to make sure that my money is being put to use and that I can at least make a certain number of percentages before we shift, right? So for instance, here's T here. Do you guys recall where we were buying it? Just kind of as a reference point, I was heavily buying it in this range here. I was buying here, I was buying here, and I'm not buying here, but I'm hoping that we can eventually crack this daily, weekly top, and then eventually we can hit 20. It might not be a bad scale exit. I do have a lot of shares of AT&T, so but they pay dividends. So for me, it's a longer term. I don't want to pay tax on it within a year, so I'm waiting to sell afterwards. But high chances that we're going to consolidate and then pop eventually higher. Okay, so with that being said and set, we'll go and run the monthly bottom scans, and I'll just bring up the stocks. I have the scan on my wider screen, so I'm not going to necessarily share that, but at least you guys will be able to see what I'm looking at. And if you guys want to see the scan, I could maybe collapse this. It's up to you guys, but I'm just going to go off of the list here.
Could you tell us how to use those clouds in the trading view? Is it the same thing, the clouds?
Same thing, yep. You just don't have a scanner in trading view.
Right. So, but we could pick up a stock and look at the clouds. So, do we do the monthly first and then weekly and daily like that?
Yeah, it depends what your purpose is. If you're trying to buy a long-term investment on a 5-minute cloud, that's not going to work. That's why I said I personally, for long-term investments, look at monthly and weeklies. I buy when there's monthly and weekly clouds together, when they're consolidated here, and yeah.
Okay, thank you.
Mm-hmm. All right, so the first one I'm looking at is, let me look at real estate. There's some real estate, so if you guys are familiar with O, I did buy some of this here, so we're peaking above the monthly bottom. I still think this is a good price as long as it holds this level here, 51.93, worst case 51.28. I bought some of this already at cheaper prices than what we're seeing here, but this is something I would keep an eye on as well, because it does have a potential to go even higher. And let me looking at we had the O here. Yep. So here's just to kind of give you an idea. Desired price was 55. Right now it's a 52. So it's not a bad price to have. Monthly bottom was our target at that time. Okay. So I'm watching that one. Let me see. I'm looking. There's a lot of real estate on here, and if you guys have any, I mean, just a shitload of real estate here. Here's your TLT here. Let me see. Okay. There's an energy stock that I don't like. This one. This one might be interesting here. NEM. I think they got bought out by somebody here. I have to check. Yeah, I do like this one here. I'm just gonna start adding some that I'll be looking at. So for instance, I just added NEM, long trigger. So you guys see the monthly and the weekly bottom clouds are there. So, and if you're to think about, on the weekly, level, why would this be a decent level to consider? If you're, we don't have FVP here, but if you're to draw this volume profile, I would bet my life, if you go on your trading view, the POC is going to be somewhere around here where we are right now. So I'll definitely watch this one. Let's see, I'm just going down the list. RTX, I'm not sure if you guys had this one at all, and I still have it in my portfolio, but this has a high chance to run to $90 here. I'll be interested about 75, 77 if I was to go back in it, but I have a same average here, so I'm not interested in adding more. I think this is a no-brainer for me. I actually added more of this. This is at the monthly bottom, so there's a high chance that we can see this. This is not a quick mover. This is not like Zscaler, but it has a potential to complete this cycle all the way to about 137. So that's what I'm kind of going for. And I've added more of this into my portfolio. So okay, I've added that one. UPS coming up here on an interesting level as well. It hit the monthly bottom. And now it's trying to reclaim it, and then it has a weekly bottom. So it has a really, really high chance as long as it's above 143. Actually a good stock for the dividends as well. So I'm gonna go ahead and add this one. And when I put these, I don't buy every single one. I kind of go back and see because I don't have unlimited funds. So I go back and look at like which ones do I want to buy. And I'll make a purchase off of it. I'll probably buy UPS Monday, just FYI. Oof, wow. Well, they got rocked. Oh man. Do you guys see what happened last time it touched monthly bottom? And now I touched it perfectly here. I really like this one. LUV. Okay, so I added LUV. I really like this. The monthly bottom here. And if you guys go, it's gonna have a lot. I mean, they can go to 34 here shortly, and there's some exhaustion here of selling. I really like this, and I think they had a didn't they have like a fuck up or something with their systems where a bunch of trips were screwed over and they got destroyed because of that reason. At least my memory serves me that much about it. But wow, look at these guys. They got destroyed as well. Is this a Chinese company? Does anyone know what JD? I believe it is. It's actually at a really good level.
It's like a Chinese Amazon.
This is at a really good level, guys, for some options. Actually, I might play some options on this.
Like a leap option?
I would, what are we in November? I would look at like May 40 calls, May 45, 40 calls.
Okay.
I mean, shares are good. It's just, I don't like holding too much Chinese personally. Nothing wrong against it, but just, well, Foot Locker got destroyed. And you guys see again, I know it's not a lot, but think about it. You buy, let's say you buy, this is hypothetical, you buy 100K at, the bottom here on the monthlies. Even if you catch this, let's say from 18 to 26, guys, that's a hell of a return on shares. They got destroyed. Oh, there goes Dollar Tree. We had this on the list. I'm going back. Yep. You guys want to see what we said? Here's the monthly bought and quarterly met at 113. They came back to 1.2 and now they're reclaiming this. This is not a bad spot for this. I'll add a few shares. I like this one a lot. Okay. Wow. Can't believe this went to $70. You guys know what this is?
The energy drink?
Yeah, it's the energy drink.
Are they do a split? Because I remember it was about $200.
Oh, I don't know. I don't see any splits on the bottom.
Mm-hmm.
I don't remember Celsius being that high. What's this? Whoa. This might be not a bad one to look into a little bit. Yeah, this is where we're looking for short. I remember that. I like this Campbell soup. I don't know how much do they own outside. I don't think it's just Campbell soup itself, but this has a really high chance of hitting 48. And I'm thinking by year end. So for this one, I'm looking between 40 and 42, and this has a really, really strong chance to run. Let's change this quarterly real quick. $34 would be next. Wow. General Mills. This one has a little bit more to drop. You guys remember this one? Guys remember this one from last time? Nobody?
Never heard of this company actually.
Is that McCormick?
McCormick? You use their salt and pepper every day, bud.
Yeah, we talk about that one a lot.
Yeah, we bought last time here. We bought it here. We sold it, I believe, a little bit higher, but yeah. No, McCormick is really good. I think we bought it here actually. Yeah, 70s. Well, I might have to go back into this. Yeah, McCormick is huge. I mean, go look at them. As long as they don't lose 60, you're okay. Yeah, 68, 68 is not bad. And I thought they had like really good earnings when they pumped it from here. Yeah, it's just heavily congested right now. It's on a quarterly bottom. I mean, that is really, really rare. Yeah, I'll definitely add some McCormick. There's a lot of financial healthcare here. I'm not really so like. This is a really good indicator when new COVID's coming, and we are about to get a new virus soon. Let's see. J&J is at the monthly and the weekly bottom here, and you guys see what's happening on the bottom of the wicks. It's not a bad price on this. This one, even, buying some, you see all these dotted lines that you have here, they're gonna hit by probably year end. I would expect them to hit. Or I would say worst case February, they should hit 170. A lot of financials. Canadian Solar. I mean, this one get decimated here. CSIQ. I'll do some loose change in this one. What is Wolf? Does anyone know what this is? Wolf speed. I mean, it looks really, really good here. Monthly, weekly, bottom. I just don't know what they do. I don't know the company. And you guys are allowed to speak, just FYI. Guys, this is a really.
I don't know what that is. Sorry.
Yeah, never heard of that company. Cool name
This,
though.
I mean, this is at a really good level. Man, I have to look it up actually. Oh, wow. They make semiconductors.
Uh-huh. Wow, okay.
Who doesn't like them? Because it looks like at a good level.
To me, this is an amazing level to go long. I mean, we're getting a hell of a discount. Wow. That is pretty good. 80% discount. if the AI is true, what are they? They're doing wide bandgap semiconductors. Man, I really like this one.
Hey, Shorty.
Mhm.
Question. I know you're looking at the long term. So let's say you're waiting for an entry. It's in your zone, and it seems like these are lower highs on the monthly and lower lows, right? Would you go to get a better entry on a weekly and at least look
So
for a higher low or something?
if you look at this, if you want to play it off the structures, look at this right here. So if it breaks, the weekly of 39, that would be, framing up on the weekly level here, and then most likely would target the liquidity at 70. But if you buy it at 40, I would sell it at 70. I would not even consider, right, debating too much unless I'm really invested and I know a lot about the company. I'm not trying to be like an early and holder forever. I'm
Mhm.
looking to make, if I put in $30,000 and I can go from 40 to 70, I'm out.
Gotcha. Yeah.
Yeah. So on these levels, the way clouds work, you will 9 out of 10 times get a reaction out of the clouds. So if you think about it here, we are at the monthly, weekly, and quarterly bottom is right at 20 here, right? So if you take, for instance, let's say I buy this Monday, I can put a stop loss at, let's say, below 31.77. I buy it, so $5 stop loss for about, let's say, $25 gain. That's a 5-to-1 trade.
Mhm.
And I can fail 5 times, and I've never failed 5 times on these clouds in a row to recoup my money. So that's how I play it.
Okay. Thank you.
That's why I run these scans, so I know. Whereas usually at the monthly bottoms, and to give you an idea, right, just to kind of ground you a little bit. Here's SPY, for instance. Where do you think SPY bounced last time?
Yeah, the
Right
monthly
up.
bottom.
Monthly bottom.
Wow.
Let's look at, for instance, SPX. Same thing. Monthly bottom. And the odds of us breaking this right now, and I'll let others speak to it. I don't know if Drew is still on. The odds of us breaking this right now, right here, this 46.36 level, are 0. And it doesn't matter what they do right now, so they will not break this. So for instance, Tesla, I'm looking at bigger stocks. Look at the monthly bottom. So somehow magically they know where not to crack this. And these dotted lines that you see, like purple dotted line goes with the purple, that means the middle of the cloud. And those are significant as well. Okay. So let's see, Apple. Apple's probably at the top somewhere. So here's Apple at the monthly top, weekly top. I mean, as it arrives at 193, it's gonna crash. And look where it bounced last time. Again, monthly bottom. And you don't get a lot of, remember, time price opportunity. You don't get an opportunity to debate too many times. Because when the price is advantageous to others, what do?
They keep buying.
They buy
rush
it
in.
quickly. Yeah, they buy it quickly. They submit the orders and they let other people chase it and drive the price for them. They're not buying here. I guarantee. It doesn't matter what people say. They're not buying, for instance, this stock, but they'll buy it on the bottom because that's where the value is. And that's why I run the scan, is to find the bottom before they drive it up. One that was really good for me, that really made one of my years really successful, was right here. Caterpillar, I bought the shares in this range and I sold them somewhere around here. Well, actually, it was a little lower, but I loaded up heavily, and look at the opportunity you had here. I mean, it's not like you had a lot of time to debate. It just went tuk, 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 and proceeded higher, right? So that's why I run this. Is I'm trying to find where other time frame buyers are sitting heavily, and these rarely, I would say, miss on the monthlies and weekly bottom combo. Okay.
Do you have a video or anything where you're showing you using those in TradingView and how you're setting them up?
Yeah, there's a video. I think Catching Rockets has the video on his channel. We did a class on that, correct?
All right, thank you.
I'll find it and I'll tag it for you.
Thank you.
I'm looking here. Let's see. Okay, so this is all for the monthly bottom. So now you see, for instance, we ran that, basically a scan And I don't need more than these. Let's say out of how many do I have? I don't have a lot here. Let's say 10 or 11, right? Including Wolf. If I buy 5 of these, the odds of me having a successful trade that earns me 5 to 1 is very high. Right. And from this list, I already have this one in my portfolio. I had McCormick. I'm probably gonna add J&J just because that's a massive company. I promised you that they're not going anywhere. Unless all of you guys start eating broccoli every day, this is gonna be around. I do like Wolf just from the perspective where they are. So I'll probably add from this list, I'm gonna add Wolf. NEM is at a really good level for me. I've been watching this one for some time. UPS, I wouldn't mind a little bit cheaper, but it's at a good level. I'll buy NEM, LUV, I'll buy Wolf and J&J from this list. Maybe some Dollar Tree, but not a lot. And then I'll look at some, JD. I might look at some calls on it just for a longer swing, like May or something like that. May 40, 45 calls and let them sit. And then I go buy leaps. I'm not looking to put in $100,000 to make $1 million. I put in $1,000 to see if I can make 5 out of it. If that makes sense. I'm looking for, a little bit more reward when I'm holding my capital for, just like you, if you go to a bank and you open a CD and you're locked in a CD for 3 years, are you going to expect 1% or 5?
More like percent, really.
Well, I mean, higher periods require higher risk. So I want you to pay me.
Yeah, I want
risk.
5%.
I want 5% for a longer period. You're holding my money, right? So that's how I look at these leaps, right? If I'm gonna be stuck in the capital, let's say $1,000 on JD, I don't know what their price options are, honestly. I don't even know if they're liquid enough. Let me look JD real quick on options. Okay, well they had 33,000 calls traded. It's not too bad. So if I look at, for instance, let's say June, that's what's available, and they're not bad. I mean, 40 calls for June are $1.10. And open interest on 45 calls is 17,000 for June. So that tells me there's a little bit of interest there, right? The delta's not the greatest at that level. 0.11, I typically look for 0.20, and 40 would offer that. So I'd probably get, for instance, June, 40 calls on JD. And I'm spending, if I buy 10 contracts, the spread is real shitty on these. It's 73 to 110. 37.5s are good, but the OI is really, really low. But they have the best spread, so that might not be bad. 37.5 calls for June, and I'll pay anywhere like $100 a contract. So that's how I look at it, right? The longer I hold, I want a little bit of more return, not like 10% on it. Okay. We can't do the weeklies, but at this point, I would just switch this actually, and I would run to see if there's any potentials for shorting, right? If I look at so we did the bottoms now, right? And I'm gonna reverse this, and I want to look at the tops. Okay.
Yeah. By the way, Shorty, are you running it on like a TOS scanner, something like that?
Yeah. I have a TOS scanner that I'm running right now.
Got it.
So for instance, let's take a look at your favorite stock, one of the favorite big boys. Look at this. What is it hitting?
Top of the monthly.
And it didn't even, it broke it by 20 cents. The chances of this now going lower to like 120 are super high. Google, oh, there's a pins. I always forget what's pins. Let's see, Pinterest.
Pinterest.
Okay, so like that one, let's just say it's gonna go back to 24 or $24 rather very soon. I didn't know Yelp was public. Yelp. Okay, they're at the weekly and the monthly top. I don't like trading inside the cloud. I remember this stock. I don't know if you guys do. TTVO. I remember trading this a while back. It's at the monthly top. I don't like it where it's at right now. And you see again, monthly bottom on TTO. I mean, it went from hundreds to 160.
This is the gaming company, right? The Take-Two
Yeah.
Initiative. Yeah.
Yeah, I just don't know what they do. I wouldn't be able to tell you what exactly do they develop. Whoa. For instance, here's, TJ, Texas Raj. Look at the monthly bottom here on Intel.
Kiss and go.
That would have been a nice entry.
Yeah.
I wanted this. I missed this entry. I was super mad when I missed it. I mean, almost doubled. $5 from 100%. So, but it's coming up to a level right now. It's in the monthly range. I do not buy anything in the monthly cloud or anywhere in the top here. It's going to reverse. MU is also at the top. So all of the semiconductors besides the Wolf guy or Wolf company are at the top. And this looks like a compression up. Like MU is going to be ready to come back down. AMD's at the top. AMAT's at the top. Apple, some checkpoint software. I don't know what that is. Crowd. Wow. And here's crowd from the monthly bottom. It would be a double, 100%. Service now. I like that one. Oof. Here's your monthly bottom again at 363, and now it's almost at 700.
Shorty, can we go back to the crowd? And then, isn't that we were talking about last week? They have a change of character going on.
This one, yeah, they're breaking here.
Yeah.
But they're also at the monthly top. So typically, what we do on change of character is that you have to auction higher, right? You can't just stop here. And you see that, if you were to go here, and let's say you pin it, is this really the break you're looking for on a weekly? Well, if we break this 210 level, then they can most likely go 220. At 220, you're going to hit some resistance, and that would be the untapped supply right here that you have.
Got it. Got it. So really, it's watching to see if they can break above it. Otherwise, they have a long way to go down, right?
They have a long way. They're most likely going to go 150 here. That would be and if you're just imagine, pretend we have an FVP and you draw it from here to the top. Where do you think the POC would be?
Around that purple line?
No, the purple dotted line. It would most likely be somewhere. Oh, that's not what I meant to do. It would most likely be here somewhere. And you can draw it on trading view. So now you see that would be the level. And typically these weekly bottoms become magnets. And the weekly cloud recalculates monthly. And to move a monthly cloud takes really a lot. It takes a lot to move a weekly cloud. I'm sorry, monthly cloud and quarterly. That's why I seek stuff on the monthly and quarterly levels to buy.
Got it. Thank you, Shorty.
Mhm.
So you say you don't do trading at the top inside the clouds. Does that mean that you would wait for a break below 207 to short?
204, yes.
Okay.
Below 204, it needs to lose this level here. Once it loses it, drops to 192 in a heartbeat.
Okay.
CRM, another one that was actually really good. I have this in my portfolio. I don't know if you guys know, but I was really big on this stock when it came back to 120s. And it's done well. I think it's going to go actually higher. Once it breaks these levels, then it has $270, $30. And typically this one gaps on earnings. It's a crazy mover on earnings. DBX, that's Dropbox. INTU, I thought they dropped a lot on some earnings or something. Okay. So this one dropped 700, came back to monthly 341 and retraced back all the way to the monthly now. Not interested. I mean, it would be potentially a decent short once loses 544 or even, what is this, 552 as a chance. IBM, ooh, Lowe's is at the top. I like this one short. Home Depot had earnings. I don't know if you guys read their report, and they said this would be the first time in 9 years they're going to have slowing sales. I'll show you Home Depot. So they bounced off of, I guess, the quarterly mid here, and they're coming up to the weekly mid.
Shorty, how much time do you usually buy on these?
On
Just
monthly
depends.
bottoms, 4 to 6 months.
Okay.
Options, but shares I hold longer.
Okay. Thank you.
Mhm. Well, there's some financials at the top. KKR, what the hell are they doing at the top? Wow, they had a massive bounce here off of the monthly mid and weekly bottom. And usually when you bounce, like when you have a quarterly mid with the weekly bottom, you get these type of moves. When you combine two, like a mid and a high or a low, you get an explosion. And man, that was a fucking explosion here. I'm familiar with this capital company personally. You guys can tell I traded Visa a little bit. So it's coming up to a weekly and a monthly top. This is shaping up to be a decent short. Visa actually pays pretty good on shorts too. So I'm gonna look at this one.
And then just a question: when we're talking about shorting, are we using option
Yeah,
or?
I use options on shorting.
Got it.
Mhm. And also at the same time protects any longs that I have, not necessarily in that stock, but like my portfolio balance.
Yeah, got it.
JP Morgan's at the top. Yeah, JP Morgan, 155. Look at that. Okay. Amazon's at the top. TJX companies is at the top. Thought they had a really bad earnings. Amazon at the monthly top. I mean, I don't know if you guys remember this consolidation. We were at the monthly top. You rejected here previously, and now you just tapped basically monthly and the weekly top here. Amazon is at a really good option for short.
Yeah, and I also remember you show us that it's almost at the top of the 3 sigma.
Yeah, I mean, I think this is not a bad option for shorting here. Let me see, just 1 second. Yeah, volume is not that great. And look at the rejection right here that came. So let's see what they do now.
They
Losing
almost
2 is gonna be deadly for it.
they almost break 140, but then that news they're gonna sell cars, bring it back.
Cars carry 0 margin right now, in my opinion. It's capital heavy, in my opinion, for them. I mean, they have money, but I don't know if I would be super excited about that. How's Carvana doing with the car business?
They drop on that news for sure.
Yeah, so it's almost when you think about the housing industry, Zillow, Redfin, and all these companies, they tried that, and how'd that go?
Not going anywhere.
I think car industry's in the biggest bubble we've seen in the cars. Okay. Any other tickers you guys have? I think I have a good list. I'm trying not to get too many here, but this is what I got. I'll share this list with you guys, and I'll pick my litter here, the couple I'm gonna buy on long side, and I'm gonna pick a few options here to protect it and go from there. Any particular tickers you guys have that's you're interested in, or
Wanna have a Nvidia.
NVIDIA? So NVIDIA actually just executed a huge monthly backdoor. So what you see here right now, like where it bounced, it went above the monthly, right? Monthly top here, you see it? Right here, this line, they came back and you see they exploded right now, and they're at the weekly top. They need to lose 472 in order to come back to 428.
Mm.
Once they lose this daily top, they're gonna come back here to 420. They're gonna have a bounce right here. But if you can live through the bounce that they're gonna give you, probably they're gonna eat $20 of it. Or you could get out here, re-enter again from the bottom. So the way it would look, you can enter here on the break. They're gonna come back and then they're gonna execute all the way down. So it's gonna look like this. High chance of that.
Look like an ABC.
Pretty much, yeah. What other? Anyone else?
Shorty, can you look at CMG and Melly?
CMG, Chipotle. Whoa. Holy shit. Wow.
Crazy.
Are they putting gold in the Chipotle burritos? Oh my god, wow. So I mean they bounced off the monthly, they completed it, and look where they're rejecting right now. To penny on monthly top. I'm not sure why. Or I think they increased the prices on their products. Of course, any increase in price is gonna drive this, but they have to lose 2064, which is $130 away. I personally would not buy shares of this right here. Monthly bottoms seem to be paying and weekly bottoms, but I would be, once they lose this level 2064, it's gonna go all the way down probably to 1937. And then ultimately 1803 is gonna be there, this weekly bottom. I have zero interest to buy anything here. Chipotle. And Meli, you said MELI? Yeah, traded Meli before. Their options pay like crazy, by the way. So Meli, if it can break this level right here, which is 1530, 1531, if it can crack through that, then it can go 1685, about $160. But if it loses this level right here, which is 1416, once it loses that, then it's going to be heading to 1100. So yeah, it's in a no man's land. It's in the middle of the clouds. It's in the middle of the weekly, and the weekly cloud is closed, meaning there's a low chance that they're going to break 1492 here. So a lot more downside than upside for it right now. And I think they had like fabulous earnings, if I remember reading about it. But to me, it looks like it's going to reverse before it goes up. But if it breaks that level I mentioned, 31, you have about $150 to the upside. Long term, I personally don't consider it till it hits 740. So it has about 50% discount that it needs to give.
Shorty, I came a little bit late, so I don't know if you went over it, but can you look at Verizon?
And you guys know I was buying Verizon here. I think I wrote it multiple times.
Yeah.
I've been buying Verizon here at the bottom like crazy. I honestly have a truckload of Verizon and AT&T. And just pay attention to this candle if you don't learn anything from. So look at this candle here. You see the volume here on 717?
No.
They dipped it below. They trapped the shorts below the low of that. They trapped them and then they took their liquidity. They took all of their shares and then they're going to go higher. Once they break this level, for instance, right here, when the clouds are telling you there's not going to be much resistance to 46. Zero. It's just going to fly. Now let me show you shop. Shop is notorious for these levels, guys. I mean, the shop literally dances off of the levels. And here, let me show you on daily. Here. Anytime you have shop at the bottom like these, it's a great. And anytime you have it at the top, guess what? Who wants to take a bet that it's gonna be a 64 by mid-December? Or even 53. I'll give you end of year should be a 53. Nobody. I'm gonna add shop to the list.
This is at the top of the monthly and weekly as well.
Monthly, weekly, and quarterly mid.
Oh my god.
Yeah, weekly top and quarterly mid.
Yeah, they split it. They do like a 110, 10 to 1 split, I think. 1 to 10, yeah.
Say it again.
I remember. Oh, I think they did it a 1 to 10 split because I remember it was a $700 something stocks.
Oh yeah. They did a bunch of slips. I'm sorry, splits. I actually like I like April's 50s on this, or 55. 50s are better. There's just not a lot of volume. I'm just checking something. So I mean, there's a lot of calls traded. A lot of them were in the money calls. Somebody bought a lot of July puts, yes, on Friday. July 45 puts were bought up heavily.
But then will that volume spike on that earning concerns you? Like the yeah, exactly.
No, not at all. They're gonna come back and fill this.
Oh wow, that's an ugly chart.
What concerns me is this right here. Now look at the volume, for instance, on these people here. Look at the volumes. And compare it to this volume that you see him buying.
Yeah, nothing at all. Yeah.
Yeah. This guy right here, you really think he's just gonna say, come on, go above? Nah. This guy sold in February. I think they're bringing the price back to him. I mean, look at the volume on the bottom. You're looking at, it looks like this. And now, I don't see, let me go on monthly. Maybe I'm missing something. This? Yeah. You're bringing it back to him. You're bringing it to fella here that's selling. There's no volume. They're not buying yet. They bought here, which is at monthly bottom. They bought heavily. I don't think they're buying at the monthly top here. I'm looking to short shop actually. I'm gonna load some.
Yeah, that looks good.
I'm trying to find one that's actually good. Okay, one of our friends bought puts for June 21st, 24. I like those as well. The spread is not bad. 10 point spread. They're $550. So even if I buy one or two of them, nothing heavy, it's you can make some decent money. And then your stop loss could be above 75. If you, let's say, clear 75, you can get out. 8 points, stop loss for potentially 30 gain. That's not bad.
Yeah.
So I'll watch that one. Okay. All right. Any questions? Any other ones?
Lulu
UNG and Pfizer.
Say it again.
Go ahead.
UNG and Pfizer.
Yeah, UNG is gonna be because they're diluted here. They're at the monthly bottom, right? I still have this, and I'm not looking to hold this for 15, 20 years, but I'm looking, there's some volume here coming in. I'm looking to see if I can catch $15 exit on this. If you're buying $6, $7, I catch 15. That's a quick double for me. And this is monthly volumes. Here's weeklies. And now you see you're at the weekly bottom, monthly bottom, anything 593 hits. I'll probably add a little bit more. Oh, and what was the other one? GNG and
Pfizer,
Pfizer?
PFE,
Oh, Pfizer.
Pfizer.
Okay. I got you. So Pfizer is reclaiming the weekly bottom here. There's a high chance it's going to go to 2652. I would definitely add the 2652. So let me show you why. Most likely we will catch some crazy virus at that level. And look what happened here. Where was it when we hit the virus? Quarterly bottom to a penny. It takes a lot to move these levels. If they are to offer 2652, I would definitely buy, because guess what? They would also be buying it at that level. And it just happens to be on this monthly level here. Look at the volume they had on that candle here. Just a coincidence that they're accumulating here. This is, 5 years before COVID. Just a coincidence that they're accumulating in this range. Right here, right? Just very, very lucky people. Okay. Yeah, I'll add here. I'm not selling. They can't get me out of Pfizer. That's what I'm trying to imply to you. They will not get me out of Pfizer.
Thank you.
Anyone else? I think somebody else had one.
Oh yeah, Lulu. Can you looking at the Lulu?
Strong buy as long as my wife is here. Lulu. Ooh. I don't like it here. Yeah, I don't like it here. This is a really good short. Me personally, I'm thinking, who the hell is going to be buying Lulu when people are losing jobs? So think about it. Most people that buy Lulu don't have money. Right? And then, no, I'm being serious. And then you have the rich people that do buy it, but they don't buy it in quantities to show off. Like, rich people don't wear expensive clothes. Right? So I don't know. I'm not a big fan of it. At these prices, this is a really good short level.
So that volume at that,
I
I
mean,
think that
look at
was
the
some news. Yeah.
look at the wick here. I think they had news about the Peloton or something. I mean, they have like Peloton news that they partnered. I honestly buy Peloton here versus Lulu, because
Yeah.
eventually Peloton will be bought out by Lulu if that partnership is successful. And look at the volumes here. Actually,
Yeah, they're trying to buy it. Yeah.
I might buy some Peloton actually at these levels. I'll buy shares and options if they have options. I don't know if they listed them.
Yeah, they do. I remember trading them.
Man, it's actually not bad at all. To buy some January leaps, man, this is not bad at all. I mean, I might just even throw for 20 calls. Let's say they push it to 15, and you have 2 years for them to get it to 20.
Oh, you mean 2025 January? I see.
Yeah. So January 2025, or even if you do 15, they're 43 cents. I'm gonna do January 2025 on these. Probably $500 worth. Just looking at the option. There's some interest here on 20s, yeah. Okay. All right. Anyone else? Anything?
I know you hate that company, but can we do Meta? Yeah. Thank you.
I figured you're gonna ask, so I started typing before you open your mouth. So Meta here is at the weekly top and the quarterly top. I'm short of everything. I just hate Meta. I mean, look at the supply that they just came here. Yeah, this is at a, and you can see now when the clouds have space in between them, they run. And now the space is getting tight, and you know the seems like the check here. Just checking something here. I met on my other screen. Oh, weekly's closed. Weekly clouds closed on Meta. This is a fucking fabulous short. Let me show you. Meta on my weekly level. You see the cloud colors by any chance? This one is darker. This one is not.
Yeah.
And look what happened last time it came to a closed cloud.
Got reject heavily, actually.
Look at Meta 300 puts. I'll be looking for April 300 puts. Let me see how much are they. April 300. Oof, they're expensive.
Yeah, their price are pretty juiced.
Yeah, but the IV is not bad. 36%. It's not the IV. It's just that they're expensive. Yeah, the chances of them cracking through this are. Yeah, they're gonna go back to 270, man. Look at the volume here. I'm still gonna look at that Meta options. All right, I think we can switch. All right, so for a lot of new folks, if you have not done through this course, this was going to be a little bit more intensive course to bring you guys up to speed. And I would suggest that you guys, if you have time, if you can't stay for the duration of it, you come back and visit it. The class itself, I'll tag this video and actually in all the future trainings, just to get some kind of admin stuff over, right? First, welcome if you join, to learn volume profile, footprints, market profile, and just trading market generated information. I think you're in a good hands. We have a good community of people that understand it, right? I'm not going to name them all, but you have traders that came in with zero knowledge and now they're, making plans and helping others kind of doing that. On a mental side of the things, you really need to fix that, right? And the best way to fix it is first identify why you're trading yourself. What is the purpose for you? And then I would suggest reading Trading in the Zone, because I do think your mental state is more important than your technical knowledge that you're going to have, right? And a lot of you guys probably have profits at one point and you give them up really quickly because you're chasing some golden goose for more profits, right? At the same time, it's important that you guys pick up the language because you guys might feel overwhelmed when people start, throwing in acronyms and if I just give you the acronym list, it's not going to help you. You have to really understand the concepts, right? To pick this up, I would think to truly understand the teachings, the volume, the market, you're not going to pick it up in a month. If that's your expectations, you're better off leaving now because you're going to be confused and hating it. And I don't think you should hate volume and market profile because volume is the only thing that actually is they can't hide. And I just showed you the charts whenever that happened. Volume was there. If they're moving in a direction they want to go to, the volume is going to be present. From learning, I say even meeting with people, right? So a lot of people are willing to help you. I know Drew has a bunch of one-on-ones. I have one-on-ones that are also free guys. So as you establish a little bit of knowledge and you're borderline like, hey, I understand it, but I need some help, you can reach out to me and we can schedule one-on-ones, as many of you have taken that opportunity, right? To have the one-on-one. Discord main chat's where all the stock trading occurs. Trading 101, right? That's where all the education material. Shorty's corner, that's where I update the plans if I see anything crystal clear. Unless you don't see me updating, there's not a lot of good setups. It's going to be a range, and that should show. Past watch list, that's where Drew posts all the links. Announcements, that's where we give you the training times and all that. And then the orb chatter, that's where if you scroll down, you're going to see the channel. You click on it, and that's where we trade live daily. So I brought this up because I realized a lot of you guys started using the funded account. So you really have to refrain from posting the, I made this much money, because it might discourage people, because unless it's real money, you're really not making shit. You should be posting your withdrawals, and some of you guys have started sending me the withdrawal pictures of your accounts, and that's actually really encouraging to see. Better than profits. Profits don't mean shit if it's not your money, right? You're not going to buy any bread with that. Also, expectation is that you're going to log your trades, especially if you're new to this. You have to understand what works, what doesn't. If you don't do that, you're going to have a lower chance of succeeding, because you don't know what works for you, what doesn't. Trading is about repeating successful habits versus the bad habits. And if you don't know what's good or bad for you, you're not going to know how to fix it. Last bullet, dumpster, don't listen to him. Okay. So the biggest thing in the market, the people, I mentioned something on Twitter not too long ago, and the guy was like, what is market auction, right? And I'm like, oh man, you're going to have a hard time in this market, just without understanding how market auctions between buyers and sellers, right? And it's almost like any other market that you've been to, whether it was a meat market, fish market, whatever the hell you've been to. There's somebody offering to sell something and somebody's willing to buy something, right? And without those people, that transaction never takes place. In the stock market, right, you have buyers and sellers, right? And we are either being efficient or we are being inefficient. Efficient means we're in balance and we're trading and we are accepting that price at that time. And as soon as market information is generated, that proves to be, telling us that we need to trade inefficiently, meaning higher or lower, right? Let's say Apple phones, Apple's trading at 200. I usually say the levels can drive news. So now you could expect the iPhone 15 catches fire on an airplane. Well, what do you think is going to happen to the stock? Most people are going to use that opportunity to offload the shares and create panic, right, to trigger the selling. So usually new information breaks those balances, and it doesn't have to be drastic as that, right? You guys saw that Moody's downgraded S&P 500 or US debt, and it did what? Nothing. Not every news is going to drive that, right? And it's the perception of the value that matters for majority, and then of course you have the inventory balances that also play a role. Okay. So now going forward, does everybody understand? I mean, I covered it briefly. So markets imbalance, people are happy, that's a fair value. Then you have the imbalance, people step in, and usually you have initiative buyers, initiative sellers, or responsible buyers and sellers that are playing a role. When you're breaking an balance, right, you usually have initiation of buyers or sellers. Buyers on the upside, sellers on the downside. Okay. Acceptances occur when you break those levels and you come back to a retest and you see that they respect that level, and that means the buyers in this case on the bottom left are stepping in and they want to accept the prices higher. That's why we play the PD value area highs retests or value area lows retest for the short side. Okay. Any questions so far? Okay. So I created this graphic after we had a couple of classes and a few questions came up, right? So without the dealers, the locals, the market auction would really be, liquidity wise, it'll be really bad, right? If you have the buyers and the sellers, if somebody's selling something $100 and this guy is putting a bid at 90, they're not gonna exchange until one of these guys, is like, okay, well, I'm willing to accept 95. Are you willing to give me 95? And if this guy's like, I can do 92, well, they're still not matching orders, right? So you need the highest bid and the lowest offer price, and that creates a order, right? Once it's matched, that's when the place takes place and it's logged, right? The key of the market is to facilitate the trade in a two-way auction process, right? And we are always seeking the value, right? Whether value is higher, right? You're expecting responsible sellers to come in, and those are expected moves. Would you guys say the initiative buying or selling is expected or unexpected? Yeah, I will ask you questions.
Unexpected.
Just stay awake.
Expected.
Initiative
would say-
buying or selling, is it expected or unexpected?
I would say unexpected.
Okay. You want to elaborate why?
Because they're trying to do price
Because-
discovery.
Yeah.
That's correct. So initiative buying or selling is unexpected, right? Because anytime you come to the value area low, what are you expecting? You expect people to come and buy it. You're not expecting people to sell at the bottom of the value area low. You're
Right.
expecting them to buy it. So unexpected is initiative selling or buying, and hence a lot of people lose accounts when we have a trend day, when the long time frame traders come in and they break those value area highs on a daily session or value area lows. It's because they're not expecting that, right? And then what do? They try to fade those moves throughout the day, and what happens to their account? They get depleted. Instead of going along, right, understanding what type of day it is or how we opened, they try to fade short, and then at one point they give up shorting, and then the market drops, right? Like I mentioned, the purpose of the market is to facilitate the trade. If there was no market, the liquidity and the exchange of goods, or in this case, shares, would be really, really, bad. The liquidity would not be as good as it is now. So that's why you have the dealers and locals that facilitate. If you want to sell Apple shares, you can just click 100 sell and somebody's going to immediately buy. You don't have to wait 10 days to get filled or whatnot. It's just there. And if you go on Facebook Marketplace, if you guys have ever sold something or bought something, let's say you want to buy, I don't know, some kind of table, and you search on Facebook Marketplace table, can you just click buy and it's yours?
No, you need to negotiate a price first.
You're gonna have to negotiate with that seller. Let's say they're asking $200 for a table and you offer 150, and they're like, no. Then you're like, okay, well, I'll do 175, and they accept it, right? So at that point, you would exchange it, right? You don't have Facebook that's like, okay, I'll buy it and then I'll sell. That's more like Wayfair, right? If you think about Wayfair buys shit from other people and sells it, they're more like a local dealer and a broker of the transaction. Facebook just brings the people and then you guys exchange, right? Remember, when we're going higher in terms of price, we're looking to shut off buying. You're looking to stop and gain an opposite response. So when you're going lower, you're doing what?
Looking
Shut
to
up
stop
selling.
the selling.
You need to stop the selling, and that's, we just did a search of the stocks where the selling came to the monthly bottoms, the extreme levels, and I'm looking to hop in to stop the selling along with others. That's why I look for such big levels, because I want to get in and appreciate, let the stock appreciate, or instrument whatever you're buying to go higher.
You want to
If
buy with everyone.
that's correct, right? And if the market is balanced, it basically means that we are at a fair price and the buying and selling is occurring, and typically on day-to-day sessions. That means there's a lot of short-term traders participating. Right now, ES is in a 4-day balance. So is there long-term traders participating right now?
No.
No, they're just trying to figure out if this
Short-term trades.
price they're gonna find higher or lower, and the break of this 4-day balance is gonna be significant. If we break higher, probably we hit 4600s really quick, and if we lose it, then most likely like 4420 is gonna be coming back rather quickly. When you see the imbalance, right? When you go from balance to imbalance, it means the perceived market information is generating aggressive buyers or sellers. Okay. And when you're
That's when
breaking,
that's when the long-term traders step in other time frame.
That's correct. You get other time frame buyers and sellers, and I've shown you last time using market profile. I'm not trying to skip too much. Using the TPO counts to see, in the bracketed market, who is trying to be dominant in the range. And then we also looked at, right, on access, unfair highs and lows to see who's buying at the bottom. Is there poor highs on tops or lows? Those are the things. They're not necessarily a strategy, but that's market generated information that gives you enough information to make an educated guess on where it's going to go so you don't get caught offsides. Okay. And on the bottom, I just mentioned this indirectly, that you'll have unfair high and unfair low. Whenever you have an unfair high and low, that means a two-way sided activity is most likely starting, and it might range there until that access is absorbed by buyers or sellers. Okay. What are two kinds of activity? Most of you guys should be able to answer that.
Short term and long term.
Yep. Second.
Shots of go up, shots of buying, go down, shots of selling.
Yep. Third.
Between balance to imbalance.
Okay. That's an acceptable answer. Also, excess high, excess low, right?
Oh yeah.
Yeah.
Okay. Number 4.
Behavior.
Say it again.
Behavior.
That's correct. It's behavior, but on a TPO chart, we'd be able to also distinguish differently, but behavior is correct. Okay. Market auction. So we just covered this, right? Short date time frame traders. Most likely we're looking for what? When you're short time, are you looking for advantageous price, or what are you trying to look?
Fair value.
Fair
You're
value.
looking, we want the fair price, because for us, the entry for that day is very important. So we are rigorous on getting the best entry. And you're looking to get into the, right now for the 4 days that we are in balance, short-term traders are really having good days, right? Because you're trading the tops and the bottoms. And we talked about the CPOC on the last watch list. On ES, it hit that level perfectly, bounced, 7 points. On NQ, the same thing happened. So when you're in a balance like that, it makes it easier for short-term traders to trade. Where the short-term traders get destroyed is when the long-term enters the market and they don't see it. And then they basically sweep them on the long or short side, and then you start fading the moves, and then you get punished for it. Okay. So on the bottom, I also added something. If unfair high and unfair low established in the IB period hold throughout the session, the short-term traders are in control. Typically good when you're in balance days, right? I would keep that in mind. I think we covered this. This is about anxiety levels, right? I don't think you guys can use that necessarily to trade, but it's just kind of give you like, anxiety level for a long-term trader goes from passive to active. From us, it's usually active to passive, right? So
What's that mean actually? Like,
I'm sorry.
on the previous video, you didn't cover this part, so I didn't know. Like, what do you mean by active to passive? Like psychological level or activity
Just
level?
activity and psychological. So when you're a short-term trader, your anxiety is you go in a trade and you get out of the trade, and you're constantly in that state of, anxiety is going from active to passive. And you're a long-term trader. Let's say I'm going to buy those UPS shares. My anxiety level about UPS right now is what?
Oh, because your time frame is long, so you don't care the price.
Exactly. I
Temper.
don't
I
care.
see.
I'm looking for long-term trades. So my anxiety level of, one of my friends, I mentioned it before, like I bought American Airlines shares, and I told him, hey, I'm buying some AAL here. Well, I didn't, I don't tell people to buy or sell. I'm not an advisor. I just told him I found it at a good price, and I guess he bought some, and the AAL dropped 12 cents. And he called me. He's like, "Oh my God, it's taking a beating."
I see.
And I was like, I didn't even look at it. I'm buying this to hold, a couple of years. I'm not going to look at the long-term stock every day. I really don't care. Right? Like MMM, I bought it. My initial buy was at 95. It dropped to 88. I was not concerned. I don't have any interest to be concerned on such a short period, right? My goal is to hold it for a longer period. That's what that means.
Yeah. Got it. Thank you.
Yep. Long-term, buyers and sellers. So usually long-term buyer and a seller do not cross paths, right? So you're not going to have access high and right below it, you're not going to have access low. That's actually never happened before. So when you're looking at charts, right, especially on TPOs, you're able to distinguish that, right? Whether it's weekly, daily timeframes, you'll be able to know where's the access, right, on those stocks. And it would be good for people to start realizing that even if you're analyzing, let's say Tesla, right, and you turn on your monthly profiles on TPO, you'll be able to identify where's the access, where the buyers were, and then if there's any poor structures. But rarely are you going to see access high and low being split, let's say, by a single print on a small range. It's usually the opposite, the extremes that have that, right? That means a buyer is not going to be buying from a long-term buyer never buys from a long-term seller at a level, if that makes sense.
Does that mean so long-term seller usually buy at a value area high to drive price higher, so that they won't meet the long-term seller, which tend to sell at a value area low?
Well, it depends what time frame you're talking about. If it's a daily value area high, a long-term buyer can find value at the daily value area high and break that, and that would be initiative buying. Because if you're looking at a daily value area, doesn't mean much for a long-term person, does it? But if you're
No.
talking about, let's say, a yearly value area high, and that would be a little tricky for a long-term buyer, right? At that point, you will have a
Yeah.
long-term seller sitting at the yearly value area high, and now you would
Got
have
it.
a long-term buyer. I showed you that most of the wicks and the volume on the monthly tops was red candles and long wicks and large volumes. If they bought on the bottom, they're selling at the top, right? And that's why they say, right, buy the top, buy the bottom, sell the tops, and you make money in the stock market. It's easier said than done, right? So, because they
Buy low,
scare
sell high.
the fear is really big in the stock market. News and people react to fear, emotional. So, okay. The theory is only concluded in the value of three pieces: time, price, and volume. So we do cover, right, the volume profile, which is based on volume at price. Time is how much time we spent at the price. And when you combine that along with the price, you get the value. I particularly trade value a lot more than anything else. When you guys look at me finding the weekly balance, the daily balance, the monthlies, I'm looking to see between what values can we go, right? And we usually start on when we analyze something from scratch. We start on monthly. Are we in value? Are we above? Where's the next value in the monthly? Where's the next value area on the weekly? And then just simply, okay, well, we broke weekly high, and the next value that, let's say, low of something is monthly or weekly, then you have that range that most likely we're gonna go in balance mode and get to it, and then you're gonna see if that price gets accepted or rejected at that level. And that's how I analyze the values, right? Quickly. Time, I would say this is your regulator. That's what TPO, market profile, considers, right? A lot of times, and I showed you earlier, if you waited for a long time at Apple at 120, did you catch a lot of shares? Probably not, right? It's almost like fishing. Sometimes if you've gone fishing, you get that little tap on your rod. You get two taps, and then you pull it, and there's nothing, but also your bait's gone. You have so many opportunities to get it, and the stock market is the same way, right? You get an opportunity to buy it at that level, and you might not get that opportunity again in a short period of time. You might get it in a longer period of time, but at that time, it's gone. And you guys experience this daily in your life, right? I've shared multiple times, when I go to Whole Foods or anywhere to buy certain fruits, like dragon fruits, I've given you guys many examples. During COVID, one dragon fruit was $16. And then, a week later, the dragon fruit was 3 for 10. Especially on perishable goods, things change fast, right? So you guys experience it, but you have to relate this to the stock market and how it works and what is the perceived value that you have versus others, right? And you usually, your value needs to be perceived aligned with the long-term trader's value as well. You do not want to play against them because you don't have the capital to do that. Okay. Price, I mean, price is basically their vehicle to explore, right? It's a discovery mechanism of the stock market. Price goes higher, you're expecting, the price. As long as you go on higher, you're looking to shut off the buying, right? So they're looking to see where does it stop. And typically, right, when we talk about failed auctions or access high or poor high, if a price reaches to a poor high, that means we didn't complete the auction. If we go to the top and you have an access high, well, there's a high chance the auction completed and we start the auction in the opposite trend, right? Opposite direction. That means, we're gonna probably go auction lower till we find equilibrium or POC in that case. And that also works many times. You guys have experienced it day-to-day living, right? Whatever you're buying, there's a level at one point you would say, I'm not willing to buy it, right? If you shop at Costco, right, right before COVID, a pack of 30 Coke was about $8 here in Atlanta, just because headquarters of Coke happened to be here as well. So a lot of Coke products are cheaper, I would say, than the rest of the country. They were $8. What do you guys think what it is right now on pack of 30 of Coke or Diet Coke?
$2.
$18.
20 bucks.
So for me, it's not whether I'm poor or rich. I just don't want to buy it out of the principle. You can't tell me that your cost of Coke went double, right? I'm pretty sure your aspartame and all the corn syrups are fairly same price or a little bit higher, but not 100% or more higher. I find it greedy, so I don't buy their product, right? And that's me being a responsible buyer and waiting for the price to come back, and I'm not participating to drive that price higher. Okay. This is probably the most important, when you're looking at footprint charts, right? It's all about, aggression and the behavior of the buyers. Are they aggressive buying or passive, right? If you're selling, are they selling at the bid? If they're buying, are they buying at the ask? And that's what, the footprint charts that we use are showing you. And sometimes, you get those imbalances where aggressive buyers are stacked or sellers at bid, then we pay attention to those. And that's really important to understand. The next step, and we have 2 slides on that, is responsible buyers and sellers, initiative buyers and sellers. So remember, I talked about responsive activities, expected behavior. So if iPhone was to drop at $200, there would be a lot of responsible buyers, I would think, on that iPhone, right? If the iPhone is at $1,700, would you have a lot of buyers there? You could, right? I don't know. If there was any news that would initiate initiative buyers to go and buy it at those prices, that'd be good. In my mind, PlayStation 5 comes in a lot. Any PlayStation release has been with a lot of emotional initiation of buyers, right? They go on 500, people buy them up, and then shortly after that, you find them on eBay for $1,000 and they're flying out. Somebody's willing to pay that to have it now. And those are initiation activity, and those are unexpected. You buying at 500 and you're as a seller, you're expecting unexpected somebody to come in and buy from you at those levels. Okay. In terms of acceptance, right? And again, the volume plays a big role. If you're breaking a value, you want to see the directional move of that with a nice candle. And also you don't want to see a lot of wicks as you're breaking a key level, because that's telling you the market auction is stalling a little bit. But at the same time, if you're going to have initiation activity, you need to see the volume break, whether it's a daily value area high. On the weeklies, you'll need a little bit more volume, and the monthlies and so on. It would, compared to the previous breaks, it would take significant amount of volume, and you're looking for that. If you break above something and you fail to hold it, that usually means a rejection of that value outside. So let's say we are in a 4-day balance, and let's say on Monday we break above the value area high, and then shortly after, we hit that level, we have a resistance there, and we fall back inside the value area high of 4 days. There's a high chance you're going to go to that POC, because that's where your equilibrium was, right? And if that auction on the top, if you look at the footprints, was completed auction, that gives you a little bit confidence that we're going to auction in the opposite direction. And most likely you go to the mean POC equilibrium, whatever you want to call it. And that's how you use this information for your trading. Balance and balance, I think most of you guys should know it now. Balanced market means it's a fair value. You're willing to trade there. Short-term traders love this just because of their liquidity sits there. A lot of 68% of the volume is within the value area, so they enjoy it. And then imbalanced markets, that means the buyer or seller did not agree with that price and they're going to push it and seek new value. Okay. How would that look? Well, here's a latest, I believe, very close to latest example. We are in a balance at 4,300. You see how we broke that, and look, we came back, and this is the identical acceptance that I showed you guys on slide 1. If you guys remember, right on the top right, there was acceptance and rejection. You broke above it, you came back, you accepted it higher, and then you proceeded to go. Right? Any questions so far?
No, sir.
Okay. It's a lot of information, but it's once you establish this, it literally becomes a small portion in your brain on how you analyze the market. Volume profile. So let's talk about it, right? A lot of people that are new, that haven't traded or used EMAs or RSI, they're probably not really thinking about volume. Where most traders that use volume think about it, right? You guys have those vertical volume that tell you on the time frame you're on how much volume had in that time frame. Well, volume profile is a little bit different. It's how much volume had at the level, at the price level, right? And it's usually horizontal versus vertical that it shows, right? And it's those cool bars that you see on the charts. The higher the number of contracts traded at the level, and if we leave that level to the upside, once you come back, it's called accumulation setup. Those levels, we've seen it work out on recently on Tesla calls that we swung, and it works on many other options, right? Remember hitting 4140 level, that was a 3-year POC, and a lot of people are shocked that we are at 4500. Once you hit a 3-year POC, you're gonna get a response. At 3 years, this was a fair price, and you're visiting that price from the top. That means that you're going to have a lot of buyers defending that level. Now, if you don't make higher highs, let's say all-time highs, if you don't break them, that tells you something that the value is going to be found most likely below that POC near future. That's at least how I dissect it. Point of control on the volume, that's basically telling you it's the highest volume on the day or week or monthly. So when we chart from monthly to weekly, we identify POCs, right? If that POC has not been touched or contested after, right? So if we have a monthly, let's say, I believe we have July POC is actually VPOC. If we left July POC and we never came back to it, we call it a virgin or naked POC. And those POCs are really, really important to note, right? And we've seen a lot of times, especially on SPY or ES, where we leave a lot of naked POCs and typically between 5 to 6 VPOCs. We're going to come back and revisit them because that's a lot of poor structure. So once you start cracking one, you're going to crack the rest of them as well, okay? So this is what it looks like, right? The components of it, you will have the value area is basically the 68% of the volume where it's been traded, right? So if you look at the bell curve here, 34, 34, 68.2. So we have 68% of volume traded between the extreme value area high and value area low, and the POC is always going to be in between. And the price can only be above value, below, or within value, right? So when you know that, and when you know how much volume is traded above those, then you know who to expect to show up. Usually short-term traders are in between value. Outside the value, you have the long-term traders coming in and looking for advantageous prices, right? Whether it's advantageous to sell or advantageous to buy, that's depending on where we are in terms of the value. Profile low just means that it's a range low. Some people call it day low. Profile high, just the high of the day. And then you have, like I said, value area high, value area low. And then you have high volume nodes. These are the, where a lot of volume was traded. And then you have the low volume areas or skinny bellies, right? Where there's not a lot of volume and the price tends to fly through it like it did here. And then you come back to the POC, usually you get a reaction and then, you're going to trade. They're happy trading at POC because that's the most fair price on that day or whatever the profile you're on. Any questions so far? Anyone? Is there anyone that never traded volume profile on this call?
Before I joined, like a month ago, I never used this thing.
Okay. No problem. So you should be picking up some of this or most of it. You might know by now.
Yeah.
So why do we use 68%? So if you think about the bell curve, I mean, if something's occurring within the first standard deviation, most likely, it's going to be high volume, high repetition, so it's going to stay there. And that's why we use it. Then you have the second standard deviation and the third standard deviation, which is also what we use for when we are in bracketed markets of 2 days plus. I usually draw the SIGs, right? I don't like to draw SIGs in a trending market because they're not as important. When you have 2 days plus, I do account for second and third deviation just so I know where the extremes are of that bracket.
You mean 2 day means their value area is overlapping, so we can
That's
consider
correct.
that. I see.
Yeah. When the value areas or range is overlapping, right, that usually leads to a bracket. And you draw the high and the low of that bracket. That's your range, top and bottom. And then you'll find the value area off of the FVP, fixed volume profile. You'll find first, second, and third standard deviation. High volume nodes, if you were to visualize it, somebody with a big tummy and somebody that that can tuck the tummy in would be the LVN of that. Typically, when you have a high volume node, those can be used as a true support and resistances. When you're trending up, making higher highs, higher lows, and you're coming back. I believe we took 2-3 trades on Friday off of the high volume nodes retests, and they worked pretty well. I believe late in the day, don't quote me, I think we hit 96 on NQ, if I remember, and then went for almost 30, 40 points to the upside off of that retest. And it's just a simple, very simple concept. And if you pick anything from volume profile is in a trendy day, use high volume nodes for the retest, and you should be okay on that. And especially in the bracketed markets, you can use only 3 levels in bracketed markets. You have a high, value area high, a low, and a POC. And you typically want to be closing your trades at the POC or as you're arriving to the POC, because most of the time it's going to have a reaction to it. Profile types. So fixed range volume profiles, usually when you have an odd number, like we're in a 4-day bracket, I use fixed range volume profile so I can define where's the value area high and low. Just think about it. Instead of knowing the value area high is a 79.9, this one is a 83, I just use fixed and I basically take it from point A to point B and it calculates that value area high and low. You can imagine how difficult this was before these tools were present. A lot of people have to look at the 4-day value volumes and figure out where's a lot of volume traded at that price and draw them manually. Now it's a little bit easier, right? Visible range, I typically have this on the right side of the charts, quant trading view, where it shows sometimes I have delta being shown, sometimes I have volume. It's basically whatever is visible on your chart. If the chart has 10 days visible, it basically calculates for what's visible on that chart. And then session volume, this is what we use to calculate and look at day-to-day volume profiles. How are we doing? Are we making value area highs, higher highs, lower lows, POC shifting up and down? Is the auction trending up? Is the trend slowing down? Is the trend that's going down also slowing down? You're able to kind of look at the session volume profiles and figure that, right? And then the PVP, we use this to look at the monthlies and weekly profiles and sometimes 6 months, quarterly. You can get really, really creative depending on what type of trader you are with PVP. If you're a long-term trader, you have nothing to do with the session volume profile. You're most likely going to be looking at monthlies and multiple composite profiles, whether it's, somebody, I think RJ or somebody looked at a 3-year value area. And then Q, or I believe ES, was right at the value area high over 3 years. And when you think about it, that's a huge level, right? It takes a lot of buying to break a 3-year value area high. That means initiation has to be huge. The volume has to be there. Just remember, we just ran 500 points from 41.40 to here. So
in a matter of 15 days.
yeah. So You have to consider that, right? I mean, is there exhaustion coming from buyers, right? Are the sellers stepping in and finding a level where they want to sell? All those things combined give you a little bit of perspective on the market.
Quick
Standard
question,
deviation.
Shorty. Sorry to interrupt. For the 24-hour, do we include
Yes.
trading hours?
Yes.
Okay.
On volume profile, you do. On market profile, you don't.
Yeah. Okay.
Yep. Standard deviations, you guys can actually, this is a video, right? And you guys have access to it. So if you go here, you can, it basically teaches you how to draw the sigmas on a 2-day plus market, right? So if you guys, I'm not going to play it here just because you guys have it. You can click this and it'll teach you how to draw the volume, the sigmas on the bracketed markets, and pretty much how to play it as well. Okay.
Yep.
Here's the visual, kind of what the SIGs are with the bell curve. So if you look at this, I think this was a multi-day bracket. I think this was this March? I don't remember. I think it might have been March, the huge bracket that we were in. And you see here, you know, you have the mean, the POC right here. You have the first standard deviation, second, and then you have the positive skew. And you see how well at 2-3 sig in the bracketed markets, you're looking on the bottom to long, and the 2-3 sig on the top, you're looking to short, with the targets being the POC, right? And then you can see the LVN, HVNs in between, so you can find the higher probability trades there as well. Okay. Value tips and tricks. This is very important slide if you're new to volume profile, and even if you're not, it might not be a bad slide to digest, because this is applicable to market profile and volume profile. This is a very, very valuable slide for all of you. If the stock price opens above the value area and then it fails back inside the value area, that's very bearish. Remember, we have that slide that's value areas advanced. If you guys remember the 4 types, a lot of these concepts I detailed in the next slides, and you guys will see that. If the stock price opens below the value and then it reclaims it, that's a bullish sign, because at some point there was a belief the value is going to be rejected. But now, if new time or long-term frame traders step in and buy it and we reclaim that value area, that means you're accepting there's a high chance of 80% working in both of those cases, right? If the stock opens above, below the value and continues to stay above or below, depending on where we open, that means the continuation of trend is going to stay, and you know it's going to most likely follow through in the direction that we open. Value area placement. You know, if the value areas are clear and moving higher, the volume is supporting that. It typically means, you know, the trend is finding new buyers and it's accepting. Once the value areas start overlapping, and I typically ask you guys, how's the value areas? Are they overlapping higher, lower, to see if the trend is slowing down, right? We talked about that a few times. If you have value area highs making higher highs, and all of a sudden value area highs are making, you know, lower highs, and the value area lows are lower lows, that's almost like a trend that you identify via candles, right? Something's slowing down and perceived value is not there anymore to the upside.
Yeah, I use kind of a trick. So I'm looking at the POC. If the POC is like keep moving up, and then all of a sudden there's a POC go down like in between today and yesterday, and then I'll consider that's like the balance day started, like day 1 balance.
That's exactly right, right? And we do that as well, right? So it's something that you guys should pay attention to. On the bottom, we do cover the spike, and I believe I added a slide. Don't quote me on it. When you have a late price movement from value areas, that typically happens between 3:30 and 4, it's called a spike. Usually these need to be confirmed the next day because you don't have another period during the regular session to confirm it. Then there's rules, right? When you have a spike, if you open above, below, or within spike, and how you trade it, right? So it's important to know when you do have those late pushes to see how the next day we open.
Shorty, does it matter what it does after hours in those cases? Okay, thank you.
Yeah. What matters after hours is, you know, let's say it's not Sunday, let's say Monday we close, let's say at 4,400, and overnight session we are, let's say, auctioning higher. That means that inventory is very long. That means you're gonna most likely continue pushing higher unless you break that close level. it becomes more about inventory levels of traders and dealers, the locals, and anything else. Okay.
By dealers, do you mean those are short-term traders?
No, the dealers are the people. So think about it. You want to sell me Apple iPhone. If I had a broker or a dealer in between me, he would buy that phone and he would sell it to me for a small profit on his side.
Oh, you
That's
mean
what
market makers?
exactly. Yeah.
I see.
Locals are market makers. Yep.
Got it.
Yep. So this is, I would say, guys, this is a super important section for you guys to understand. This is applicable again, market profile and volume profile. This is the relationships of how you closed and where do you open, right? And we have 4 scenarios, and believe it or not, everything that we've covered is connected to the next slides we're gonna cover here. And till you read the slides and you hear me and you go back to your charts and maybe you spend some time on charting, you will see, your homework should be go find cases of this, 10 cases of each on a chart and see how the price played out and see what it did, right? You're going to learn about value areas and opening types, the day types, and then opening range types. And believe it or not, they're all interconnected, right? They all work together to give you a little bit more, I would say, probability of your trade working. Value area highs, right, to value area lows, those are called values areas, and then range is previous day high and previous day lows. And these are the 4 types that I care about, right? Opening outside the PD but inside the range, opening outside the PD value area but outside the range, right? Opening within PD value area acceptance, and then within but a rejection, right? The last question, do you want price to chase value or value to chase price in a trend?
Price to chase
Yeah,
value.
value chase. In a trend, I
chase
want
value.
value to chase price.
No, price to chase value.
In a trend, you want what?
Price to chase value.
You want the value to chase the price. In a trend, you want the price to go away, right?
Yeah, and value keep catching up. Yeah.
And you want the value to keep catching up so you don't have a significant drop, right? All right, the first one is, this one is opening within PD value area. That means you're accepting it, right? So if the market opens within the value area, within 1 hour balance, we don't exploit outside of the VA. Okay, now you can think about the type of day we have. What type of day would we have if this happens? Number 1 happens. What type of day would you have, Cuban?
I'm sorry, if the market, the first one?
Yep.
Value area. 1 hour balance, we don't. A D shape.
That's correct. And most likely it would be a range, tight range
Range
day.
day, yeah, D shape profile.
Sometimes these days can also be non-tradable if they're sideways, right? If they're
Yeah.
super tight, expecting news, sometimes they're not tradable, right? As long as the IB, right, stays somewhat medium to high, that's tradable. You buy the tops. I'm sorry, you sell the tops, buy the bottoms, and it goes right. And the risk to reward is limited, but also, the 2-sided activities on between buyers and sellers. And these days, a lot of people are in our Discord are actually really good at trading these, right? And typically you can be done very quickly in the market when this happens. How does it look like, right? So if this is our previous day value area and you're auctioning in between, that means you're accepting the previous day value area. That means you're happy that this is the price that you like and you're going to trade in this area until new piece of information gets there and you get a rejection. So that's something like this. If you open with the value area, then within our balance, we explore outside of this area, market is not liking the value that you're in. The risk reward is increasing due to the imbalance being created, right? Because there's a high chance now that you're going to auction where?
Yeah, wait.
Higher or lower?
Higher or lower to seek new value, right?
Yeah.
And that's, you have to pay attention. That's why we have the IBs, right? We have the value areas where we open in between. So you know what is the perceived value of the market? Where was majority of your volume traded? So when you think about this, right? In this case, we traded between, in this case here, we traded between the value, right? Value area high, value area low, and you see the bottom wicks here, right? They came in, and I mean, they used it as a rocket. And then you see them breaking, right? In this case, you see them breaking the previous day high, and they really never looked back, right? So if they opened, they open above the value area high, right? And then they came back inside. Well, actually, never mind that. I didn't see this candle. They opened within the value. They explored higher, got rejected. They came to the bottom here to the POC, really never had a body below, and they proceeded to go higher, right? This typically right here, in terms of opening types, this would be a reversal type of opening, right? You go higher and then you come back, touch a key point, and then you reverse and go the opposite direction. And that's exactly what this is right here.
So it's safe to say that it did the 80% rule right there and then took off?
So this one here opened within the value area, right? It explored higher. I mean, and from the value area perspective, right? It explored some of it here, but then it went above, got rejected, and I don't think none of us would have been able to catch this. You had a strong wick and then immediate buying here off the value area low. So it did complete it, right? But it's not the best, as you might
Not the best setup.
chop up
Okay,
a little bit. Yeah.
thank you.
Can I ask what would be the best? What would be the best entry? Things the week is so long, it's hard for us to catch it.
On this one here, I mean,
Yeah.
I'm looking at 2 days and looking at past, retrospectively, I'm looking at it. If you're gonna play this, right, you can play the POC reclaims of this, and I don't know if this is 30 or 20 minutes time frame. It looks like it's probably a little bit 15. I would play, if this is the case, you can buy the value area lows, right? But
Yeah,
if you
that'll
don't
be a
get them,
perfect entry. Yeah.
yeah. Otherwise, PD POC, I would say, is probably a good one here.
Oh yeah,
If you
because the
wanna-
overnight they keep touching it and didn't go below. I see. Yeah.
Okay. So this is them telling you the value, between this and the way it would look like. You're rejecting the value, and we can have two type of rejections. It could be a bearish and a bullish, right? In this case that we just had, it was a bullish break. They went to the IBL, and the market sometimes can become too short when you have poor lows. When the market becomes too short, most likely they're going to auction in the opposite direction. And in this case, it looked like it was forming almost like a short cover rally. They tried to break, and they couldn't, and then the market auction in the opposite direction. So now here you're seeing us rejecting the previous day value, right? We are inside the value and we are no longer agreeing that this is the value. And typically when you have a balance of 2 days plus, those breaks on volume tend to play out, and most people seek to play the acceptance of those areas, meaning once it breaks the value and it gives you a retest, that's not a bad long, and you're looking for volume confirmation to agree with you. Opening outside but within the range, so that means you're outside the value area but you're in a really tight spot. I think this can have a good trade, but if you miss that good trade, most of the time you're going to get chopped up. So for me, let's see, this is kind of how I visualize it, right? So you're opening above, in this case bullish, you're opening above the PD value area high. The key here is that you do not break the PD value area high, because if you do break it, what is the high probability setup here?
Do break it the value area high.
If in this case you're opening above PD value area high, what is the high probability bearish setup on this play here?
The 80% rules in play go to the POC and down.
Rejection. Yeah.
Yeah, you have an 80% rule, and that's why I like this, Dave, because the 80% rules become really powerful. Okay, and when you have something like this, usually when I'm watching for the auction type, this would be one of those reversal types. That means you're opening above the value, and you can use the value area high as a reversing point. So it auctioned higher, let's say it hits previous day high, and then it comes back to value area high. That also can be a good entry for alongside type of the auction that you're having. And then I prefer if it fails here and take it to the value area low, because that means they trapped a lot of people here. Same is true for the opposite, right? So on a bearish day like this, let's say we open below the PD value area low, and let's say things change and you regain the PD value area low, then most likely the reverse, we're stopping the selling and we're going to look to go auction to value area high. If you break PDH in this case, right, most likely you're going to continue higher. You're finding new buyers. And in this case, PDL gets broken. Most likely you're going to continue because you're opening outside the value. That means you're already rejecting the value, right? You're not so confident because you didn't break the range top, right? On top in this, low in this case, you're still hesitant. As a buyer and a seller, they're not 100% hesitant because they didn't break the range tops or gap up above it.
Mm.
If they're able to gap up above it, then the PDH becomes super, super important. And we'll cover that here in the next slide. But PDH would be a great retest for a long opportunity. Okay, and then obviously the bears, same thing's true on the opposite side. Opening outside of range, I hate the gaps, right? Everybody does. If you open outside of previous range, right, that means you're opening outside of the value. There's only two things I'm looking for. I want to see how do they auction when they come to the previous day high or previous day low. If they show, let's say, excess, low at the PDH, that means that there's a lot of buyers coming in and they're going to defend it. Most likely we continue that gap and we're going to reclaim the gap. And those are type of auctions that typically, are test drives. They came in, test that level, and they're going to continue higher, right? And the same is true on the bottom. If you came to the bottom, right, of the PDL, you tested it, you saw that there was a lot of sellers, and let's say maybe an excess is created where you see it's a completed auction, that typically goes hand in hand, and you're going to have a high probability trade at that level. Okay.
But then even when we close that gap, can we still say it's a pool structure because they don't really interact with previous day's value?
Well, that's correct. I mean, the only way you would see it as a full rejection is if you get back inside and you trade inside the value. That you haven't really. You usually fix structures that are outside of the value because within the value there's a lot of volume. There's not much to fix, right? Typically,
Yeah.
I have a lot of single prints inside the value.
Yep, got it.
So this is what it looks like, right? So if you're opening outside of the VA on the bullish side and you come back here to the PDH, that's kind of the test drive auction. You go up and you're looking here, most of the people go long on the retest of the PDH. If you lose that PDH, then immediately know that that could be a reversal level, right? That they come under and then they drive the PD value area high. If they crack that level, then ultimately the 80% rule would be in play. Okay, and opposite is also true. Okay, dual tape. So typically, don't short the whole or never sell a dual tape. When the market becomes too short, the long-term traders, right, that notice that or in the pits, they will exit their trades short, and the market will have the opportunity to kind of unwind and go higher. Or opposite is true as well, right? If you're too long, right, and they exit their long positions, right, what's going to happen? Well, if the dealer is buying all those longs and they can't find buyers, what does the dealer have to do?
Offload.
They have to sell it. So that's, it works both ways. And usually you want to pay attention to poor highs and poor lows when you're looking for this. Because if you're trending, let's say lower, and we're unable to make lower lows, and long-term trader notices that, well, most of the time they would close their shorts, take their loss now, then get caught on the long side and really blow up their account. Okay, profile day types. So this is, we cover this multiple ways, right? I would say it's applicable to both, right? In some cases, I gave you more text. These are good, visuals of the day types, right? You have the trend days. Usually, trend days are associated with the open drive and type of auction, right? Where you open and you never really break the opening range, which is 30 minutes. You never break the low of that range. That typically is associated with the trend date. Then you have a double distribution day. And in the PowerPoint here, I do cover each type of days and how do you play them, right? What are they? I'm not going to go through these one by one just because literally everything that I say will be reading off the slides that I put together. There's no value for me to spend 30 minutes when you guys can do that on your own and really can figure out what's in it and go look for these and chart them. So
Yeah.
each one of these is covered here, how to play it, what does it mean, whether it's a short liquidation, in this case, like a long liquidation, how to trade B-shape volume profiles, double distributions, the B shapes, how to trade it. And now we get into the market profile. So market profile, I'm sorry, but let me ask any questions on volume thus far. We covered a lot. We covered, how to identify the date types, identify, high volume nodes, low volume nodes, the value areas, openings of those. Any questions on any of the volume?
Shorty, I just got one question. Is it possible, because I've seen it happen, but not often, that the 80% rule can be played twice in one day?
Once it's explored, it's no longer important because those prices are now in the memory of the market.
Okay. But it can be, but
It can be, but I don't count it. I don't count it as 80%
I got
rule.
you.
I call it as unexplored area, right?
Okay.
It can't be explored. That's the key.
Okay. So you don't put as much weight as you would on the
No.
first round. Gotcha.
No. The same thing as an accumulation setup, right? If you accumulate like 4140, how long did we wait for that level?
Yeah.
I mean, the first step, and then here you go, 500 points. Would I
Yeah.
trust 4140 now again? I
Yeah,
would, but
probably
not to
not.
that extent that we
Yeah.
did the first time. All right, so on this market profile, Peter's a guy. Some people say that Dalton came back and he reinvented the market profile. Honestly, I don't think he reinvented shit. It was really Peter that put it together and he created the graphical views of it, of market, time, price, and it generates the value. A lot of people try to use this for swing trading and market profile, and that's because the market itself changed. You have 24/7 trading, you have every kid in 20s and 25s that's trading these markets now. So a lot changed between 1980s and now in terms of market. And it's totally different, in terms of the participants, who's in it, the aggressions, emotional buying, and then even if you go on the demographical view of people, right? I mean, a lot changed. So the market also adapts, and I particularly use it for day trading, but I do look at market profile on weekly and monthly's level, especially volume profile, right? I look at that on all time frames just so I know. Market profile is different than volume profile because it's concerned with time, not necessarily volume. And most of the time when you have a trading platform, it will have TPO and volume profile together because it matters, right? Price, we've done an auction before. If the price moves out without volume and it finds that there's no more buyers at the top, most likely it's gonna reverse. And we've done it, with $100, $20. I did it. Remember, I showed you guys with the wine cooler, like a real example of it. It really works, and it's just basically the mechanism of supply and demand. When you think about it, that's pretty much everything you're doing is related to supply and demand. I would say market profile is not necessarily an indicator to give you a buy or sell, but it does give you a lot of information about that day, about that prior day, about potential future day, where it can go just based on what it's generated, right? The basics, I would say we cover this. Is there anyone that doesn't understand any of this slide?
Can you please go over it?
Yeah. So let's start with each letter. So each sets of letter, like A period, represents 30 minutes of trading time. B period is another 30 minutes. Therefore, the initial balance of 1 hour is what?
80.
Wow, AB.
A&D.
It's initial balance. That means that, you take the highs of A's and B's, and that would be our initial balance of the day. What is the range open time frame?
First 30 minutes?
First 30
1
minutes.
hour.
Remember the orb high and orb low? You guys
First
forgot about
hour.
that? No, 30 minutes is opening range. Initial balance is 1 hour.
Got it. Yep.
Right.
Thank you.
Right.
You're right. Absolutely. Thank you.
Yeah.
Okay. So now when you think about this, each letter here that you're seeing, you see the B made higher highs compared to the A's. And if you're to look at this in a candle, you would have a candle that's higher than that A, the 30-minute
Mhm.
candle. That's how you can visualize this. Then you see the third 30-minute candle would have made a lower high compared to the B. So now it started framing down. The next one
Yeah.
is also framing down and also putting in lower lows.
Yeah.
Right. So that's when I look at the date when I'm trading and I say, hey, it seems like we're framing down. And sometimes I take a trade that's breaking those levels. We took some Friday, right, when we were trading live, based on the same concept, right? I was looking for these, and then we were looking for exit short, go long, on a flip of a coin. Okay, I switched short to long, and as you get a little bit more familiar with the market, you'll be able to do that rather quickly, right? Noticing where to exit, where is the value area low in the bracket and whatnot. But that comes with a little bit of experience, I would say. Doesn't take a long time as long as you stick with it. Single prints is when you have, so this is a broken letters, right? These are split, meaning you see where A traded for each column B. What this does here, it tells you, like you see the A and B did not overlap, correct?
Right.
So that means the B here is single prints at the top, which means it's an access high. This is called a selling tail.
No fair value.
There's 3 names for it. There's a selling tail, access high, and what's the third one?
Unfair value.
Unfair high, not unfair
Unfair
value.
high. Yeah.
And the same thing happens, guess where? On the bottom.
On the
So in
bottom.
this period, you have I period, TPO I period. There was a buying tail. So other time frame buyers stepped in and defended this level at 90.20, whatever this coffee commodity is. They came in and they started buying the I period, right? And you see them, in this case, they closed at the J period shortly at the low, which puts a lot of pressure on the bear side here, right? Because they're able to auction it and they close low to it. That it typically means selling pressure. If you have more than 2 TPOs on the bottom, let's say, there was letter A here, what would that make this day top B?
Poor high.
Poor
This
high.
would be the poor high, which indicates, what does a poor high tell you?
Unfinished auction.
But it
So
can
then-
go higher.
So think about it this way. I'll give you an example of a poor high. Let's say you're going climbing the hill, a really steep fucking hill, and you're going, and you get tired. And then eventually you're just like, man, I'm just going to take a few steps, stay here and go back a little bit. As you're going back, is it easier to go downhill or uphill for most of you?
Downhill.
Yeah, they take a step. And then again, because you didn't reach that top of your finish target, you turn around, you get your energy back, and you climb that hill till you get to the top.
Yeah. To finish.
Once you reach the finish line, that would be your completed auction, right?
Yeah.
And the same thing as in the stock. Until we find that access high where other time frame sellers come in, that's where you can be like, oh crap, we completed the auction here. Most likely we're going to now auction in reverse in the opposite direction, right? And usually when you look at this, you want to pay attention on a daily level, right? You want to see if there was access highs as you're trending up. If you're trending higher and you have a lot of poor highs, what does that tell you?
People going too long.
Okay.
They're not
There's no other sellers that we didn't find the top yet.
Oh.
Or short cover?
Well, short cover is a little bit different. It's usually based on the shape profile. And usually when you have a failed auction, that means you don't have a seller that won anything. The auction did not complete.
They don't
If
want to
if I'm to auction my PC right now for, let's say, $3,000, without giving you any specs, who wants to buy it at 3? Okay, I'll tell you that it has 2 terabytes, has 128 gigabytes of RAM, has 2 NVIDIA graphics 4080s inside. Who wants it at 3,000?
I might.
But you would be crazy not to, because each graphic card alone is $2,000.
Yeah. I don't know
Right.
much about that, so I didn't.
Well, I'm just giving you guys, as you
But I
generate
know what
more
you mean.
information, if it's a poor high, that means the auction did not finish, and most likely it can lead higher. Somebody might say, I won it at 3,500, right, at 3,600, and it keeps going. And if somebody, let's say from 3,500, they're like 4,000, well, and nobody 4,000, what does that mean in terms of the auction for the PC? It's done. We got a buyer for it.
Failed auction.
Yeah.
Oh, completed.
We found a buyer, and that's it. The buying's gonna stop because there's nothing else to give you there. You got it, right? And that's a
So,
completed
Shorty,
auction. Access
you're
high
saying
tells you that it's completed. We found a winner on this auction, and most likely we have to auction lower to find new set of buyers.
Mm.
so? One letter means auction's finished. More than one single prints up is excess.
More than
Yes?
2 single prints is excess. 2 and more.
Okay. Thank you.
Yep. So if you have 2 or more TPOs, single prints at the top or bottom means 2 TPOs were visited by so I'm sorry, 2 TPOs at the top together, right? Letters together means poor high, poor low. If you have single prints, more than 2 single prints, that's excess. And the more single prints you have at the top, what does that mean? Or at the bottom?
Means the rejection is strong.
That's correct. You have a stronger sellers at the top and stronger buyers at the bottom, the longer the single prints are. Okay. I added some of this for you guys just because the questions you guys are asking now. Okay, so you guys can go back here and kind of read about it. I plan on adding more. I just don't necessarily find time between trading live and the time I put in to add more. There's a lot more I can add to it on this. But read this, understand it, and I think it'll help. Initial
Sorry.
balance. Mhm.
I want to ask a question. So when you talk about previously on the market profile, you're talking about like say they going to the poor high location couple times, and then the dealer noticed that, meaning they too long, and then they want to sell it. But does that means that instead of making it excessive high, they just straight up selling it? But what would this situation require it for?
So in a poor high, so let's say I believe we had one Friday. Remember we said that we are most likely targeting that 36, I believe level was on NQ, 936 if I remember.
Yeah.
From 896, we said that if they break this level, that there's a high chance they're going to clear that poor high. And that's exactly what they did. Poor highs become a magnet to finish the business.
Yeah.
So when you have a poor high, let's say you find a good high volume node like we did at 96 to go long, your first target is poor high.
Mm.
Especially if
Makes
it's higher
sense.
and you're in a balance, they usually balance days lead to fixing of those poor highs, lows much quicker than the trend days.
And
So,
if you have,
Shorty,
and if you have an
sorry.
unfair high or unfair low,
You're expecting
then
buyers to step in or sellers at those levels.
because that's a finished auction.
That's correct.
Okay.
So, how do you use the TPO for day trading? Are you using the prior days
Yeah,
TPO?
we use the prior days, and then we also look at, where are we opening in terms of prior day? Is the value area auctioning higher, like we just covered those PD value area highs, the opening types? I use that to figure out if the IB of today is auctioning higher than PD value area high yesterday. That tells me the initial balance is being formed on top of the value from yesterday. That means they're interested in higher prices.
Okay, thank you.
Yeah.
Initial balance, I think I covered it in this slide here, but here's a little bit more. You have the first, on trading view, you have this little black line that's drawn and you can't change the color. You have the A and B period, that's your initial balance.
Yeah.
You can find also initial balance high on the orb shorty targets. We have the IBH and IBL that gets formed at 9:30 to 10:30 once that's set. And I'm just telling you how to set up the ES and NQ, at least how I use it, right? And there's still a lot learning to do on TradingView because it's also their beta version. So I don't know if they're changing code on their side. I'm still adapting to their, I would say, TPO a little bit. Okay, so if you've been with us, initial balance, typically, if you spend a lot of time above initial balance high, there's a 88% chance that the IBL's been, the low of the day has been set. So what that gives you is that it gives you a high probability setup. Did we break IBH on Friday on NQ?
Don't remember.
Oh my God, you guys have a memory.
Yes, we did.
Right, we went higher. We hit the IBH2, meaning it became a trend day, like extended typical day. And they broke it, right? They broke higher from IBH. Then remember we said IBH retest would be great. Then they came back and then they proceeded to auction higher, right? What I pay attention to when I look at initial balance, and there's an indicator in TradingView that's called initial balance that tells you some statistics about the initial balance itself for ES and NQ and all other instruments that you use, but it tells you how 20-day average of initial balance, then it categorizes a high, medium, low, or high, medium, small. If it's we had a type, remember that it was 55 points on Friday, the initial balance on NQ.
Yeah, it's tight.
I feel like I'm giving you guys some knowledge you guys haven't seen since Friday. It was a really tight range, and there's a lot of you, which is good to see, that were pointing out, man, it's super tight range. Most likely we're gonna pop out of it.
Capital day, yeah.
Was tight as hell.
Yeah, and then they broke it, and then they went to the 2B, right? Two IBH levels, right? Which became a little bit more extended, typical, still tight, but they broke higher. You want to pay attention how much time we've spent above initial balance high and low. If we spend a lot of time, let's say 3 10-minute candles a bit below IBL, there's a 88% chance, and you can go and test this if you don't believe it. There's a high chance the high of the day has been set. So how can you use this in trading? Is then you can use the volume profile and know where's the high volume node where the sellers accumulated to sell lower, and you will play the retest of that level. Right? Or you could use combination of that plus the fibs, the class we had last Sunday, and combine those for confluence points, right? If that initial balance is high, the chances of that taking a break are slim. And most likely you're going to have a range day, a non-trend day, as we would call it in market profile, right? You're going to range or have a neutral day. You short the tops, buy the bottoms, POC becomes your target between the entries. Okay. If we are breaking above IB or below, right, with the nice candles and we're holding, you don't want to fight that, right? Because it's telling you the market generated some information and we're having an extension. Extension is when you break the IB, right? If you break it higher and then you fall back inside, let's say you break it lower and you close inside, what type of day is that, Cuban?
Double distribution.
Careful.
It's not 80%.
Look at the highlight.
So lowercase b?
Wait. Hold on.
I said you break the extension up, you break it down, and then you close. And that means it's a neutral day. You don't have long-term front buyers or sellers in control. It's just short-term traders, and they're trading in between. You guys need to conceptually understand this, not memorize it, right? You have to be able to, each one of these boxes, you don't necessarily need to know it. The way I would break this whole thing down that you guys see here is that you have a trend day and a non-trend day. Which days on the top are your trend days?
2 times IB.
Well, no, I'm saying it would be a normal trend day and a distribution trend day. Those are the two type of trend days you have. Which ones are your non-trend days? Well, those are neutral and normal. A normal variation is just a little bit above and you're not going anywhere. You're not really trending. You're just having almost like a bullish extreme of a normal day and a bearish extreme, or a normal bearish extreme here. So this one goes with the normal, but it's on the extremes of that day, on the high and the low, and the trend day is a trend day, right? So don't overcomplicate it too much. I would just break it down in 2 sections, and I give you the idea how I look at it. Okay. TPO failed auction, poor high, poor low, and here I explained to you what is the poor high. You guys asked. Here's poor high is 2 TPOs together. It's a failed auction, high chances of revisiting. So for instance, how would I play this? Well, if you reclaim the value area low of this day, what would that tell you? Well, there's a high chance you're going to revisit the value area high, right? With the 80% rule. So if you go long here, you can exit at the POC, break above, retest, you go long at the POC, target value area high. If you crack and you get initiative buyers at the value area high, where are you going?
The poor high.
High chance that
Higher.
you're going to resolve this poor high here and figure out if you're going to auction higher or if that's going to become excess high. Okay. So on the bottom here, when you have one single TPO here, I do consider this a poor low, not a poor high. I think I copied this from here. This is a poor low, right? And if there was two single A's here, it would be an unfair low, and that changes. Yeah. But in this case, it would be a poor low. Okay. And I'm giving you a lot of info and definitions here, but let's see. This breaks down how the day kind of form, and it gives you a little bit of more statistical stuff, right? And I would say, you can read this and you can also apply, go back to your chart and see for past 5 days, what kind of days did we have? See if it makes sense how they behave in those days. Are they exploring higher on the value area highs? Do we get immediate rejections above the value and below the value? Does that mean they're happy trading? You're buying the bottoms, shorting the tops, pretty much what we did on Friday as well, until they broke the highs. Okay. You have to be aware when the long-term trader is entering, and those are not too hard using TPO to figure out whether it's single prints. And then if you see initiation above IBH or IBL with a nice volume, that's telling you what's one long-term trader's value low. It might be day-to-day traders value area high. Okay. Just because day-to-day we see that it's a value area high for somebody. Remember, somebody asked, how do you know about the anxiety level? Well, anxiety level for him to buy the daily value area high is low because he's going to hold it for a longer period. He sees value on the long-term scale much better than what you see day to day. So that's when you have to be, realistic when you look at a chart and, screw your feelings aside and see if somebody's entering the market that you should be aware, right? And this is what I asked Cuban, if you have a range extension on both sides, right? This is called a neutral day because they cancel out. You extend
I have it on my notes right here.
and now if you break below and you go back inside, it's a neutral day, right?
You're seeking value, right?
Yeah. Typically, if you break initial balance and you fail to hold above it, very, very high odds you're going to visit the IBL. And the same is true for breaking IBL and you reclaim it. High odds you're going to go to the IBH because now they have to find where's the value, and the only way to find value is to auction and see how's the volume and price being responding.
Yeah.
Okay. So the normal days, I think I've given you everything you need to know here and kind of to establish, at least to understand it. So I would say you guys can read through this and understand it. But the way I see it is that, what is the benefit? Like, why do you want to know the type of day? Well, if I know what type of day we might be having, and if we have, let's say, poor highs or excess lows, then I can, with higher probabilities, determine what am I playing. Let's say we are in a trend day high, right? But we had a really strong excess high at the end of the day. Well, was it a short cover rally? So now if you break below the POC on that P shape, there's a high chance you're going to visit value area low. So I could play that, right? Or let's say in a D day and you have a poor high at the top, well, the odds of you revisiting that poor high are super high, right? So now I know how I can play that, right? I would say most of the time you're going to have, obviously you're going to have a trend day or a non-trend day. And I would say most of them you don't really have, I would say nowadays, you don't really have a normal perfect day, right? And it's hard to find a perfect day anymore just because the participation of people trading is very high. And you see people buying Tesla at 250 only for it to drop $20, but they didn't want to buy it at 196. that's the difference, right? You have a lot of crazy people that, they post these trend lines and VWAPs and RSIs, and they have a lot of followers. And, even if you have 200,000 people, everybody buy 10 shares. I mean, that's a lot of shares to be bought. So those things add up, and dependent on how they trade can influence the market. And that's what's happening, right? You have a lot of different traders entering the market trading. So don't expect perfection on type of days you're having, right? If it auctions, a point or 2 points to make it certain, it's probably that. You're not going to hit it perfectly on every time, and that's not what you should be trading, right? Especially when you have trend days, your entries are not going to be perfect on trend days, nor should they be perfect, because you might not get a retest. When you have an open drive, the 4 opening types, and I think that's where we go next. I think we covered this, right? Price is always above, below, or within. And this covers the initiation. I think we covered on the previous slides. Is there any initiation and response activity? Assuming no. Okay. So
for initiation, does it sometimes go against response activity?
Of course, you have limit sellers and the market buyers.
Okay.
And that's when, on a footprint chart, if you're looking at footprints, that you will need some absorption, right?
Yeah.
If you're limit selling on market buying, and if my limit selling quantity is much higher than your market buying, what happens?
You got absorbed, and then the price will go down.
That's exactly it. High chances you're going to go opposite. TPO count, I don't suggest that you guys spend too much on this unless you really want to get into the statistical side of it. This is only used in bracketed markets, right? If you want to understand who's in control in the bracketed market, right? Is it a long-term buyer or a long-term seller? You can use it, but it's not a proven strategy to use. I added it because there were some requests on private messages. Can you cover it? So I covered it, but it's not something I use to make decisions or even look at on daily. Because by the time I count these, might as well lose the day. Okay. Range extension. So you get a range extension after the IB is set, right? You're looking to see if that extension has volume. Do we have on the upside, do we have a lot of buyers? So like in this case, you had a range extension of A and B. You see how we broke above, and look where we came back. Came back right to the IBH. And it doesn't necessarily mean that it's going to come back to IBH, but it becomes a decent level for buying because the market has a memory of it, and they came back, tested, and proceeded to go higher, right? So those levels you want to pay attention to, especially on IB. Are we spending a lot of time? And remember, I said if the IB, if you're spending, let's say this looks like 1, 2, 3, 4, 5. This looks like maybe 10-minute candles. If you're spending, let's say 3 10-minute candles above or 15-minute candles above IBH, there's a high chance that the low of the day here is set. And you see, obviously, we never really even the opening candle here on the A period, right? You see, did we ever dip below? This is called an open drive. You come back, you never crack the opening range low, and you proceeded higher. That means most likely you're going to have a trend day up. Okay. I'll leave these for you guys to read. And here comes the 4 types of open. You have the open drive, test drive, rejection reverse, and open auction. And this might sound complex, but you guys see this every day. So let's see here. Open high, I would say these become your trend days, right? We open, and then you remember the Greyhound comment not too long ago. I said, as soon as we come back here, we're going to rock it and go higher. And they did that, right? They came back, they never broke the low, and they just proceeded to auction higher. And it's almost like you're just seeing the price, and they're not giving you an entry at all.
That's when we extend 2 times over the IBH or the IBL, right?
No, that necessarily means it means that your 30-minute opening drive that you're not really breaking in a trend day, you're not breaking the low of that.
Okay.
Right. And the same is true on the bearish side, right? You're not breaking the high of that, and you're just basically auctioning and making on bearish side lower lows, lower highs. And in this case, right, it becomes very, very difficult to get a perfect entry. You do
Yeah.
not want to be shorting this on a bullish side, right? It becomes difficult unless you have a major level coming up, right? And you want to scalp this, but even then, momentum can be so strong that you do not want to be, on the opposite side. So when you see, for instance, we come out and we're making higher highs, right? And we're not breaking the low of that opening range, and there's a high chance that we're going to come back and test those highs and proceed to have a trend day up in the bearish mode, trend day down. This is probably the most confident opening type you have. You're opening and you're just going. You don't put in the lower low on the opening range. You're just making higher highs or lower lows. Okay. Test drive. Think about this. If you want to go test the car, you're not just buying it. You're gonna go test it, and if it's good, what are you gonna do?
You buy it.
Then
You
buy
buy
it.
it. So that's the same thing here. We're gonna open and test it. So usually what that means that you're gonna test a key level. Remember that opening 4 types that we had just moments ago?
Mm-hmm.
Somewhere here, these like opening day types.
Yeah.
Oh yeah. The behind, yeah.
Yeah, so there
Above
comes a
rally.
correlation to this right now, right here. So think about this. If you're opening, in this case, in this chart here, this is a previous day high, that means you gapped up, correct?
Mm-hmm.
Well, if you're coming and retesting the previous day high, that's your test. You're coming to the previous day high, so it's an open test drive. And what does it say when you gap up? What do you not want to break?
The low.
The low of the first candle, maybe, or the IB low.
What does it say on the
Previous
highlighted?
high.
Previous day value area. Okay.
Previous day range marker.
Previous
If
day.
it does not break
PDH.
previous day high, you're good to go. That's your test drive. So now maybe you can see how it kind of correlates between the date types, opening types, and auction types. There's a correlation in between them. Magic, right? So now you see they came back here, and did they ever break it below?
No.
Yeah, they auctioned higher, they came back. Your chances for an entry here, you have a lot, right? If you're to draw a volume profile from here to here, I guarantee you your POC would be here.
Yeah, your PLC be there.
Yep. And look, they gave you that. And if you buy somewhere right here in this line,
Yeah, we
you
draw a
can put a
line right
stop
there.
loss. You could find this to be a really successful trade, even if you target previous liquidity high, which would be in this case here, or if you draw some
That's
fibs, you could also
That's a
find
good
that.
support level. Yeah.
So that's how you can use the open test drive in accordance with the where are we opening a relationship to know what can you get out of it. Okay. Open rejection reverse. This is the hardest one to play. This is where a lot of people lose money in accounts. So your previous day highs here, you auction above it, right? You hit a key level, and then what happens is that you reverse and you break previous day low or any key levels that you might have. So what that tells you in terms of confidence, the confidence of buyers here is very low, right? In this case, right? There's no conviction. There's not 100% sure. And this is a really, really difficult day to trade. Unless you're 100% sure, but look at the candle, right? You open with a full body candle, you broke the previous day high, then you came back, gave it a nice, decent retest here, and then to expect this candle here is really hard.
Yeah.
Right. It's easy to look at it, post right now and be like, yeah, man, that was an easy short.
Yeah. Right. that candle flies, man. You can't catch it.
And this day type is my, this type of open rejection reverse is really, really, I would say this is a really hard to trade.
Probably best not to.
If you're lucky, you catch it. If you're not, you get blown out.
Yeah.
And if is there signs you can use to look at the opening? Yeah, I mean, typically I would say the 930 candle on volume is much higher than what you're seeing here.
Yeah.
Right, so you auctioned with lower volume at the PDH, you lose the PDH, right? If you lose it so quickly and then you come back for a retest, could you short that? Yeah, that's one of the setups that we had earlier on the 4 opening types, right?
Yeah.
Let's say here you open within
you get me some?
the range, and let's say you open actually above the value. I would say the value here in this case would be somewhere here. So you open above the value, but within the range. Then you auction above the range, but you're not able to build value above it. Well, once you lose the value area high, what's the odds that you're going to hit? Well, your odds increase. You're going to hit the bottom of that, right? The value area low. And they did that, right? If that was somewhere around here, they smashed through it and then they broke the PDL and they retested that and made new lows. So is there signs you can use? But at the moment when you're trading, your brain might not pick this up immediately and make rational decision what you should do. So that's why this day is when you have this type of it's really, really hard. It's hard for me. I can imagine if somebody has opposite brain wiring, it might be easy, but it's a difficult day.
Just looking at it, it looks difficult.
Yep. Open auction, this is, I would say this is your non-trending day. So if you guys look at the, between the 2 days, there's your value area high, value area low. Did we ever break the value area here? It really just stays in, right?
Not really. Yeah.
These days are somewhat, they're limited risk, limited reward, and that's your, buy the tops. I'm sorry, buy the bottom, sell the tops, right? Type of day. You have some of these, but people get scared because sometimes they break these value area highs, right? Like they did here with the wick, and they immediately reverse back and look where they went. Did they spend a lot of time debating here? No, they just went to the bottom, to the value area low, right? And then you see that we just ranged in between. That's called a neutral day. Even on that little, matrix that I gave you guys, it's called a neutral day. You have a extension up, extension down, and you just auction in between, right? And I bet you, if you look at these wicks and you go on this day here, I don't know, this is maybe November 6th, probably is, you will see that there was a little bit of excess high and a little bit of excess low, and they just negotiated in between until they figure out where's the value. So any questions on these opening types? So, market profile wise, we've covered the basics of, the language of it, right? What it is, how to use it, single prints, whether it's poor high, poor low, and then the value area shifts, or is there access? Is there not? Are we shifting down? And then, are we framing up in terms of markets, right? So when you think about framing up, it's just, are you making higher highs or higher lows? And we've been making, higher highs for some time now. Like 15 days, we made higher highs and higher lows. It's actually one of the better days in past 15-day period in a couple of years, right? So
Shorty, to trade this, sorry, one second. So to trade this, when we have open auction, does that mean the first 30 minutes we just have to wait and see? Like, so say we enter IB low or previous day's value area low, and then put a stop loss and to see how it goes, because as
usually
it's developing,
wait for the 30 minutes to develop for the opening range. So what is that orb, right? Orb high, orb low. You would wait for that to be established, so that way you can at least gauge what type of day it is. The next 30 minutes, pretty much, 90% of if we stay with the initial balance, and 85% of the range day has been set. So if you see within an hour we're not extending, right, there's a high chance you're going to have a D shape, and then you sell the tops, buy the bottoms.
Yeah.
If within the first hour you're breaking the initial balance, right, and let's say you see where the previous day high is, well, if you're breaking the balance and the value area high is there lined up with the IBH of today, probably a target, especially if it's a poor high, that becomes your instant target, right? And remember, you're trying to collect crumbs sometimes you get better moves depending on how poor structure high or low is. meaning the structure in between. How did the market get there to the point? Like the past 15 days, I would say if I was a long-term trader, I by no means am interested in being long here.
Of course.
Right. If I'm a day trader and I went, I don't even know how many times I went long on Friday. I went long, but I also went short. Right. And I'm
Yeah.
more inclined to be careful long here on a long term than I am, short term. Right. I'm sorry, short on the long term. Just because there's a lot of shit to be fixed on the bottom, right? And I'm able to look at the profiles and look at day to day to distinguish that.
Got it. Thanks.
Footprints, actually, I will not cover footprints today. Probably have to save it because I did cover volume profile, market profile all together today. So
Yeah.
I will release the new quiz probably tonight at 9 p.m. or so. I will also write up the levels tonight. I'm taking actually the kids to a zoo today, so I'll be gone with them. But when I come back, I will publish the quiz where you guys will have cumulative quiz of everything that we've talked about: market profile, volume profile, and footprint charts. And it'll be a good gauge test for new people if you've never done a footprint chart to understand, how well do I know? And then if you go through the PowerPoint, or the next class will focus solely on footprints. It will tell you if you understand something or not, right? And then when you apply your quiz to the charts, you'll be able to distinguish really, can you apply it? And I say when we trade live between me, Drew, and even Bean and others, right? Even Knowledge Seeker now, he's been helping. You guys are able to really distinguish and see how traders are looking at this. Why is he going long here? Why is he short here? And if you start connecting the dots, most of the time we're going to be at the same level on Friday. I don't know if you guys remember. Do you remember that 36.75 level on NQ? Does anyone?
On NQ.
Oh my God, you guys in levels.
It was stopping volume there.
36.75 on NQ.
Yeah, there was a level at 36 when we were trading live with Drew and myself. When we went long. Anyone remember that?
Yeah, I think that's the morning, right?
Yes.
It go down and then it rocket.
Oh, yeah. I remember that.
Yeah, I mean, we hit the 36 and it literally exploded. I mean, it went pretty much to the high of the day from there, if you guys remember. And
Yeah,
Drew was
yeah.
calling 36.75, and I said, I'm long 36.75. And within minutes, we got, 20 plus points. And you see, and me and Drew might trade differently, but the concept of that trade became the same. Because what we saw was the same thing, right? And that's important when you're trading live. Your question should be, hey, what did you see there? Or if you don't understand it, can you elaborate? Can you explain it? And if we can't, then that's not good. Because that means it wasn't really a setup. It was more of a, hey, this is a lucky guess, right? And at that time, remember when we were taking that trade, I said this is forming a double distribution day, that there's a high chance if you reclaim the high volume node, that we can probably auction higher to the next node. I don't know if it was like an 80 level.
I think there was
Let me see.
imbalance there also.
So let's
on
see
the footprint chart.
So here's your, the day that we opened, and this was the level I believe that we took right here. We're looking at this one here somewhere, 36 right here.
Yeah, had some orders already.
Yeah, it was this one right here, I believe, at 1040. I can look at my trade log and see it. But we went from here, and you pretty much went all the way to 72. I think we targeted somewhere around 62 because that was the POC at that time.
It's also the IBL.
Yeah, so the POC was there. I mean, you were able to get out with a nice little profits, and then obviously they proceeded to go auction higher, right? But even now, I'm just going to quickly touch base on this. If you look at volume profile, for instance, here's your 4 days. What do you see?
Balance.
We were definitely
Balance.
in balance. I mean, you had the, I forgot what this was. Wasn't this CPI or whatever crap was here?
Yeah.
They auctioned much higher. But then if you look at this, right? Let's just go from here to here.
Wow.
Could be a big move.
Wow.
You're right at the POC. If you lose this level, right, there's some buyers. So if you lose this 661 on NQ, where's the high chance you go?
To the low, to
Single
the
print.
value area low.
This is your volume profile level where most likely you're going to visit.
Yep.
If I turn on the TPOs here, and I'm just going to go regular. And let's just change the settings. Okay, so here's your TPOs. Let's make sure that see if one works. And one of the ninjas is about to color the walls in the house. See, this is when I say, like, see how it's difficult to figure out what they're doing. If you go auto,
Yeah.
it doesn't work.
That's horrible. Yeah.
That's what I'm saying. So it's not, I don't think they've figured it out 100% yet.
Yeah.
Should recalculate here. And this, I would say this can't be right. But yeah, this does not look right. I don't need, well, something's not right here.
No.
Does it matter that the chart's on 65 minutes instead of an hour?
No, 65 minutes breaks down the day just evenly, right? That's why I use it. Because it gives you a correct number of candles. But even if I look at 30 minutes here now, let's take a look here. Come on. So here, I mean, if you look right now, on top, we have access high, right? And you see where they start. They have it at 927, right? So if they're able to clear, 927 and build value here, most likely see that they have a poor high, right? They could target probably 920, so about 50 points higher. And now you see quickly here from RTH periods, what do you have here that's important?
Double
Stacked
POC.
POCs.
You have two stacked POCs right at this level. So if you're able to crack to this level, what do you expect?
Going down to the bottom.
No, you expect it to go here because this would be your poor low.
Yeah.
Expect 825. So I'm pretty sure you guys could make 40 points be profitable for you guys.
Yeah.
Right. And then you see here that you had access, right, on the short side, right? So you had 819, which we had marked previously, and they pretty much corrected it all the way down. And then they had another excess show up here, 807. So now, if they break 825, high chance they're going to come back to this ledge before the single print start to 807. I would look to close my shorts at that level. That's all in TPO. So now if I go on volume profile, well, look at, first sig here on RTH. Well, here's the first sig is sitting right here at 788. So they would have that. And then you have the first sig. Let me make sure this is showing up. Something's off on the first sig here. Yep. So you have the first sig here at 915 and the other one is at 836. If I go to second sig, it's right here. So there's a lot of space in between the sigs here that they can play. And the POC being literally where the two TPOs are, it's telling you the value and the time that was spent here. This is the most fair price that we have. Time and volume are agreeing that this is a super important level for NQ. So tomorrow, let's say we crack below this level, and ultimately, let's say you lose this, you want to lose this ledge here of 57, you're probably going to test every one of these on the bottom.
Which ledge? Can you explore on that?
It's a ledge right here. You see how it falls off, the TPOs fall off. There's like a little strong support off of there.
Oh, the TP, I see. Got it.
So you have a little cliff, if you want to look at it, right below that, right? And like each one of these would be like a little small ledge here, and then you have a major one pretty much right here. Go ahead.
Question, Shorty. Since we are at the CPOC right now, would that be a go long or would it be a wait and see what happens?
Well, tomorrow we just have to see how we open, right? So, like actually tonight, right? When you come to here tonight, you see how, I mean, you had, you came here at 350 and you exploded higher, right? And you guys probably should remember that 74 level. I think I was pretty voiced on 74 being important. So tomorrow, if you crack below this level, right, we open below and you see we're coming under, this would be my short level. If we go above and you come back here at open, I take this long. Right, it just depends where do we open in relation to that level tomorrow. And just remember, this week that we're ahead right now, this is where poor hedge fund managers make their Q4 bonus. Because the big boys that made money are no longer next to computers. And this is their opportunity to move the market on low volumes. And
The
I think,
87, sorry.
you know, you
The
have
874 is the 7-day POC.
That's correct. Same thing as on ES. I would say it's identical here. You're in balance as well here. And I'll be really cautious sizing up this week. If anything, I would size down to your minimum that you can size.
Okay. I just play MNQ then.
Yeah, I mean, no reason to size up when they can manipulate something in your, you know, not in your favor, right? So, or whatever you get caught, I would definitely just be cautious trading it with small size. And obviously, I believe Thursday we're closed. I believe.
Friday too.
Yeah, I think it's a partial day. I think.
Yeah, it's usually a partial day till 12 o'clock, 1 o'clock.
Yeah. So I'll be honestly, don't be so excited about, oh my God, I have to take a trade. There's times and weeks and days where you really don't need a trade.
Yep.
Okay. And if you look at it, you know, I'm on monthly profiles here. Is this really where you want to initiate a long?
Not for long term for sure.
No.
It might be for some. For me, I don't like this
No,
initiating,
that's
right?
price
Value area
discovery.
high. You know, there's a lot going on here where there's a lot of reasons I wouldn't go long here.
Yeah.
Especially when you have this
Full structure.
poor structure here. I mean, come back to this level at 440.25. I'll take it because that's also August value area high. That was the monthly framing up at this level. Give me this level for a retest. I'll take it long. I'm not going to be married to it, but I'll take this long here. I'll take this long over this long. So.
For sure.
All right, guys. Well, hopefully you guys had a good session. I'll hop on tonight, probably around 9:15. Depends when these tigers go to sleep, and we'll cover up the levels a little bit more detail. But you're in a 4-day balance. The easiest levels you can define is what?
874.
No, you just
For
take
NQ?
those 4 days and draw your FVP. Find the value area high, find the low, find the
The highs
CTOC,
and lows.
and find the 2-3 sig, and you're done. That's simple
And
as
then
that.
maybe consider the PD value high, low, close, all that, right?
Yeah, I mean those are your immediate targets for. I would say that would be immediate levels to get in and aim for that. The CPOC, the cumulative POC, is going to be your exit, whatever you do.
Got it.
You just went across, right, Shorty?
Say it again.
The FVP, you just went across, right?
Yeah. Just grab 4 days.
Okay.
All right, guys. Well, I'll post everything tonight in terms of shares and the quiz, just because I got to get going on the road now. It's about a 40-minute drive for us.
Okay.
It gets dark at 5 now. So.
Thank you so much, Shorty. This was
Thank you
great.
so much. Yeah.
Guys,
This is
have a good
awesome.
one. Bye-bye.
You too. Have a good one. Bye.
Yeah.
Bye, guys.
Bye, everybody.
Bye.